Good morning, everybody. Welcome to NinjaTrader Live. Happy Friday. And today is Capital Preservation Friday with my good friend Pax. Pax, good morning.
Good morning, Jimmy. How are you?
I'm doing pretty good. I feel good. I have a lot of energy. We were talking about working out a little bit, me and you. I'm back on the workout regimes, giving me that extra energy boost.
You've got so you have the energy this morning, and I'm dragging my keister along a week after Easter, looking to work out to get some energy.
Well, there you
Let's
go.
go.
Well, you're hobnobbing with vice presidents now, so you got a lot of stuff going on.
That was so cool. We took my daughter, my wife and I took our two, I've got 5 kids, our 2 youngest daughters out for dinner to celebrate National Signing Day for college students. And we went to Gibson's, which we go there all the time. We're kind of regular. So we walk in and we sit down and who walks in but Vice President Pence? I thought, holy shit, that's so cool. Holy smokes, it's so cool. So I walked up to him and just started to talk to him. His mother was Irish from the South Side, not far from where I grew up. So I just started to talk to him about that. And I thanked him for all of his service for what he did. And then he introduced himself to my daughters. He was just a real gentle man. He's a patriot, whether you like his politics or not. Man, he's a patriot. It was great to see him.
Yeah, that was fantastic. I loved it. Follow Pax on X and you'll see pictures. That was pretty cool. And by the way, a good friend of mine, Katie Vanek, is a long-term server there. Hopefully she served you. If she did, she's awesome.
Well, if she did, she likes me.
There you go.
I'm a good people.
Anyway, so today was a big day. Friday, everyone's like, well, it's Friday, nothing's going to happen. But we have non-farm payrolls coming up, so that could be a big day, right?
Oh yeah, absolutely. It's going to be a big number. I'll let Tracy or you or somebody who understands the macro picture or wants to understand the macro picture more than I do talk about the importance of it this time around. But yeah, I'm looking forward to it. When I was a clerk in the Eurodollar pit, we used to call unemployment unenjoyment. Butterflies. The butterflies right before the number comes out, and the silence on the trading floor with 3 or 4 or 5,000 people on
Yeah.
the floor, and it just completely silent. And then when I became a local, when I became a trader, it was the same basic thing. It was butterflies, but for a different reason. I wasn't going to cost my broker a bunch of money. I can cost myself and my family a bunch of money. Now, I don't carry the same angst into a non-farm payroll number. I look forward to it. I look forward to the volatility it's going to provide us. I look forward to the trading opportunities we'll get. But I don't get as nervous as I used to. And
Yeah,
that's a
no,
good
it's
thing.
fun. It's funny you should say it. So unenjoyment, it was unenjoyment Friday. I remember those days. But then they changed it at a certain point. It was the unemployment report. It
Yes,
was always called the unemployment report. And then it became someone changed it to employment situation. They felt it sounded better. Let's call it the employment situation instead of the unemployment report.
yeah, less offensive, I think. That's funny.
Oh,
Yeah, that's
yeah.
funny. They even tried to depoliticize the unemployment report or the unemployment situation. That's funny.
Yeah. Anyway, well, let's take a look at the S&P right now. I mean, this is, again, we're kind of on the move. I'm going to pull up a chart real quick here, if I can. We're on the move up, up 20 handles so far. We're almost to that 5650 level in the mini S&P. I mean, there's a little, earnings was part of this probably, but there's some anticipation, I think, coming into this.
For sure. There is from a technical awareness standpoint. Yeah, I don't like saying technical analysis because it just makes me uh, I don't know. It's got different connotations. So from a technical awareness standpoint, the from the levels that I'm paying attention to, level to level to level, right? The NASDAQ achieved the quarterly target earlier this week at 19,450, and that then started to create new momentum to the upside. And brings us back to around the yearly opening range, but we've got a lot of work to do to get there. And then the S&P also has been struggling around the quarterly pivot, 5617. Got there and closed above it, but then with the earnings yesterday afternoon, we kind of fell apart underneath it. And then, good or possibly good news with negotiations between us and China on the tariff situation, popped the S&P back above that quarterly pivot. So I'm going to be really interested to see if the spook can get above 5617, then that triggers a move, back higher. I don't know if you remember on when we were all in Naples, Florida for the opening of NinjaTrader Live on pardon my voice. I think I'm coming down with a bit of a cold, but NinjaTrader Live on Fed Day, I believe it was March 19th. We talked about we were trading at 56.17, the quarterly pivot. And my upside target was 57.70 for that day, and off the off the Fed report, we rallied to 57.70, stopped, and then came down from there. And then also on tariff day, the opening range that day was 56.17, the quarterly pivot, and we rallied up to 57.73, and then we fell apart underneath there. So tariff day. Fed day left us a double top at this 57.70 area, and it also happens to be the 200-day moving average. The simple moving average is 57.78. So I'm expecting that the S&P holding this level at 56.17, this quarterly pivot, it elects an equidistant swing of 785 points. But first, we're going to attack these levels to the upside. 57.25 to 35 is a big level. Just call it 57.30, and then up to 57.70. And if we can get there, then we go to the December quarterly pivot, which is 58.40, also 58.37 that we broke from all the way down. This is an interesting market to me.
I don't have any lines over. I got PAX lines on my chart. These are all PAX lines here, all your levels. I'm maxing out at 57.70, but the one I colored in white, that 56.17, that's the quarterly pivot you're referring to, right?
Yes, yeah. And if you zoomed out a little bit, you can see how the market has acted and reacted in there, going back to in that level, going back to to March when it became our quarterly pivot.
Yeah,
it's a great level. So, from a macro sense, for me, I use the opening ranges to drive me between levels, right? To get me from level to level. But from a macro sense, I want to be long above 56.17 and short below it. Now, I'm not going to be short, but in a macro sense, if we open up at 55.40 and we're above the opening range, I'll be long. But from a bigger standpoint, 56.17 is the dividing line for me for the entire quarter. So I call them flattened zones. On Twitter, I'll talk about it as a flattened zone, or the traders in my group know it as a flattened zone. So for example, Wednesday's opening range was, today's Friday, Wednesday's opening range is 55.09. You remember that level we talked so much about for the last month and a half?
Yep.
That was our opening range. And above 55.09, we had those levels at 55.85 and 55.89. So I'm going to be long above that 55.09 OR, and I'm going to take profit at 55, and I'm going to add above that to 89, and then we get up to 56.17, and I flatten. We get above 56.17, I can put that position back on and reestablish it. It's just, it keeps my trading simple, Jim, and it helps me protect myself in all circumstances, still gives me the opportunity to make money consistently, repeatedly, and in a scalable sense.
Okay, so that quarterly pivot number, that kind of helps you define your bias, right? Where are we at in relationship to this number? And so my bias going into the day or the week, whatever, is going to change based on where we're at. Right now, we've wicked through that 56, 57 number twice, 2 days in a row. We don't have a close above it yet. What are you looking for? Are you looking for a close above that level to drive up to that 57.29?
Well, I want two closes as confirmation, but yeah, one close is sufficient, and two closes is going to tell me for sure we're going back up to 50. So remember, we talked about, or I talk about market, the market's having goals, like and that goal then is kind of like a magnet, drives the market up. Above 56.17, I believe the next goal is going to be 57.70 because it's a double top on two very, very important days, and it coincides with the 200-day moving average. So I believe that's what the market is going to want to do. And similarly in the NASDAQ, that price is going to be 20,000. Like it coincides with like 20,004 to 500. So the 200-day moving average is 20,305, and then we have those.
I'm moving back. I'm gonna toggle over to the NASDAQ chart just so we can see those numbers. So go ahead, give us those again.
So 20,305. We didn't put that on there, but it's up. It's up near that 20,380. So 20,305 is a 200-day moving average, and then right above that we've got that double top for March. You know, from and that goes to 20,500. So I'd be looking for a move in the NASDAQ for another 400 or 500 points. We're above a lot of things. And now 20,000, this is interesting to me. The NASDAQ was so much, I like when the NASDAQ leads. I always have liked it, especially when I traded NASDAQ primarily, but I like when the NASDAQ leads the indices up or down. The NASDAQ led obviously on the downside. The NASDAQ was much weaker on the downside when we were breaking in March and April, and it's been stronger, at least this week, it's been stronger from my standpoint and is leading the market higher. The quarterly pivot in the NASDAQ is 19,450, and we achieved it earlier this week. My eyes are getting bad, but we achieved it. April 25th.
Yep.
And closed above it. The S&P struggled to get to its quarterly pivot at 56.17 and didn't do so until yesterday.
Yeah, I'm going to color this line white just so I have it on my it stands out a little bit. So there's that 19,450. You're exactly right. We crushed it on the 25th, and never look back, man. I mean, yeah, we had some wicks, big wicks, but this is the NASI. NASI has big wicks.
Yeah. The NASDAQ is a wickable market. That's a good point.
Yeah. So anyway, going further up, I have a 2693 and a 2947 PAX line up here.
And then above, yes. All right. So and above these, if we can get through this congestion, the 200-day moving average, which isn't a big level for me, but there we have big levels above that 20,380, and then that 20,500 area, which is those double tops, and then we're getting into the next market goal is going to be 20,947. It's an old quarterly pivot, and then that takes us back up to the yearly opening range. So now we're getting into, some. Can we get there? Yeah. We can be down. We can be down. We can be back down at the lows pretty quickly, or we can be at all-time highs pretty quickly. And for me, I'm a trader. I'm paid to react. I'm not paid to think. For me, I am really absolutely convinced that the best way to make money as a trader is not to trade my opinions and my guesses. I'm a trader. I'm not a PM for a hedge fund. I'm a PM for my family's money, and that family money I've made, so I need to protect it. So the way that I look at things as a trader is very simple: one level to the next. It's not rocket science. I think I've talked before on here that Margie Teller was the biggest independent trader ever. 5'3", 5'4" woman, biggest independent, what we call retail trader now in history. And Margie said to a bunch of us one day, you're all looking at the same support and resistance levels. If your levels are any good, they're going to be similar. You're looking at the same moving averages. You're looking at the same lines on a chart. What makes you different from you, and you different from you, and you different from you? Most of you will lose money. And what's the difference maker? And that always stayed with me. What makes me different than everybody else at this table? And I couldn't quite put my finger on it then, but I have a pretty good idea of it now.
Well, and that's why I still cling to, when I go to my intraday charts, I still cling to the pivots. The pivots, S1, S2, S3, R1, R2, R3, because I know there's a whole universe of people using these levels for entries and exits. So they're, areas of interest where you want to consider when you're trading.
Right. And if you guys, you're going to have to take my word for it, right? Because here I am on YouTube talking about, everybody else is going to talk about their levels and stuff. You're going to have to just take my word for it at this point until either you join my group or you just pay attention to these levels. But these levels I'm telling you, they don't adjust. They don't change. 56.17 will be a quarterly pivot or a flattened zone for me when my kids are trading in 20 years. because the funds that move things, the HFTs that move things, they all have the same levels that are programmed in, all Fibonacci math. They have the same levels programmed into the computers that the market will act and react around them.
That's right.
You know, and so it's just going back to the original point that I was making. It's just about it's about how you're going to manage yourself and how you're going to manage your positions. I've talked about this before, and in light of, or maybe I haven't here, in light of Capital Preservation Friday, it is the whole the most important aspect to this trading, long-term profitable trading, is how you're managing your money, how you're protecting it, and how you're managing it. That's it. That's it. Okay. My stats don't matter. My what's your win rate, Pax? I don't know, 20%. You know, my win rate is low. But when I catch a good trade, I'm gonna add to it. So go big, go small, or not at all, to borrow a phrase from Anthony Crudele. That's the key. Go big, go knowing when to increase your size, decrease your size, and when not to trade. That's the key. I don't need to catch every wiggle. I don't need to catch every move, and I sure can't scalp the noise. I'm going to trade above, I'm going to be long above 5509 to 5617. And I can talk about these levels with my eyes closed. I have either printed in my mind, and I'm going to be long above 5617 to 5657 to 56 or to 5729 to 5770, and I'm going to be long, really long, above 5770 to 5840. And we get above 5840, I'm going to buy the bejesus out of them up to 59.49. We get above 59.49, we'll be at all-time highs pretty quickly. And then we'll be at 64 even is now the equidistant swing. Oh, I'm talking too much, but the equidistant swing is important. We had our first close about 56.7. Where did we close yesterday? Have we closed about 56.17 yet?
I think just barely, yeah.
Okay, so we've had, I think, only one close about 56.17. That gives us now, and what the market does on the, here's another concept, equidistant swings. I talk about them from a daily standpoint on Twitter, but what the market does on the upside, the market will now do on the downside. So you look, I mean, it's just simple math. 56.17 minus 48.38 is 785 points, I think. That gives us an equidistant swing of 64 even. 64 even. Let's go, man. I mean, can we get there?
I don't know. That's ambitious if you kind of compare that. Oops, sorry about that. If you compare that level to the talking heads on TV, but that would be a new all-time high for sure, right? We had that high in February 19th, and that was I'm on a continuous back adjusted chart, 61, 66 half.
Yeah.
So we're getting there. I don't know. What are we, about 6% away, maybe?
Well, so, that was 500. The equidistant swing from 61.66 to the quarterly pivot of 56.17 is 549 points. So 56.17 minus 549 takes us to 50.60, roughly 50.70. That was the equidistant swing. And then we expanded the range by another 200 points. We made it down to 48.32, depending on what you're looking at. 48.32 is the low of the all sessions. 48.67 is the low of the S&P, regular trading hours. That gives us an upside target now. That gives us a 785 point swing. So that now takes us up to 64 even. Now, do we get there? I don't know. We signed a deal. We signed a deal with a mineral deal with Ukraine. Well, that's, I think, kind of bullish, right? I don't know. China and announcing that we're talking, and that's kind of bullish. Who knows? There's still a lot. We've talked about this too. There's still a ton of excess liquidity sitting, waiting to be deployed into this market. Who knows?
Mineral deals. That's above my pay grade. We need Tracy to walk us through that. But so there, those kind of things do give a boost to the market. And by the way, I love the deli quotes. Those are the best.
Well, he stole a lot of them from me. To be honest. So I've decided to just lift some of his too. We steal lines, and a lot of, there's nothing. I don't think there's anything that Anthony has invented, nor have I invented any either. These are all of the things that I say I've learned from people, and I mean, I tweeted the other day about how I was talking to a bunch of guys in the NASDAQ traders, pit traders, a couple of them still trading. And one of them said, Pex, you've led like, 3 or 4 full different lives. We were talking about me being a Catholic priest. I wasn't a priest. I was in the seminary. We were talking about, my time on the floor. I mean, just all kinds of stuff. And I tweeted about that. This is, I don't know, man. I look at this as the greatest business in the world, and the hard work of trading then isn't necessarily about sitting here staring at charts and studying another chart. The hard work of trading is how I'm going to take care of my mind, my body, my spirit, so that I can not control. I can be on top of my emotions and learn how to use them. I spent a lot of time in therapy and a lot of time in life trying to figure out why, I have whatever, shortcomings with, my weaknesses or whatever. Why? Who cares about the why ultimately? And I think that's part of maturity. I just need to know that I have a tendency to overtrade. I don't need to understand why. I need to understand. I need to know that I have a tendency to become very emotionally involved in my trading, which is going to push me to over leverage, oversize. I don't need to know the why of that. I just need to know that it exists, and then I can protect myself from it. I think that's the point of acceptance, right? We need to come to a point where we accept ourselves.
You're emotionally positive in life in general, brother. So I get that's the way you are. But let me say good morning to the chat. This whole NinjaTrader Live community is, I mean, the folks that are chatting and that are listening to us, that's the community. It's not me and you. It's these guys and gals. Thank you for being here with us. Rev Trader has a question for you, Pax. Your quarterly pivot line, is it based on OPEC settlement, which would imply a spot pivot, not a futures pivot? Are you just using those pivots on the near future?
Oh yeah. So it is based on expiration, but the everything measures from there. Okay. So when you're looking at the yearly opening range, let's see if I can answer it this way. And you're looking at the yearly opening range, everybody, okay. I want everything in my trading to remain objective and not subjective. We're rallying, the market is going higher, lower, or nowhere. So higher, I want to be long, lower, I want to be short, nowhere, I want to be flat. Now I'm going to use the opening ranges every day to help me determine what the micro, so to speak, higher, lower, or nowhere objectively is. So I'm going to be long above that, short below that. All right. Now, at the yearly opening range, that number becomes, the dividing line, 59.49. That's where we open the year. So if we're above that, then, we're positive for the year. If we're below it, we're negatives. So that becomes a major pivot point. And then each quarter we get a new one. Each quarter we get a whole new expiration price, and that then becomes our dividing line, long above, short below. And everything we do is going to be measured against that level. Equidistant swings, I'm long above it, short below it. I'm adding here, I'm taking profit here, I'm sitting out there. It becomes all of that. Now, whether I'm talking about the spot price of it, I don't pay much attention to the spot price. I'm going to pay attention to futures. It is my learned opinion. I've never actually said that word in a sentence in regards to me, but it is my experienced opinion that futures run the world. It is my absolute opinion, and that's all it is opinion, and we all have them, and we know what they say about opinions. But it is my learned opinion that futures run the world. And everything is going to be based on it. Now, I know that options traders are going to say that the cash run the world, and and that very well could be true, or that stocks do, but futures do. And so I'm going to use those futures levels as my dividing line. Now, whether I'm wrong or not, whether I'm right or wrong, doesn't matter to me, and I don't need somebody to try to come up with a really good theory, because it's me keeping things simple, and it's me using these sets of guidelines and rules to protect myself from myself, and to be able to really go out there and do well.
That's great stuff, man, for sure. But we're coming up. We're coming up, and the time is coming. This is a big number. Shai is with us in the house. She's going to walk us through what happens in a couple of minutes here. Good morning, Shai.
Good morning, gentlemen.
Hello,
How are you
sister.
doing? I hope. So before the data actually comes out, let's take a look at kind of what expectations are and what they would mean for the market. So market expectations for non-farm today is an expected gain of 138,000. Now that's a slowdown from March, which was at 228,000, but still indicating steady employment growth. This expected moderation combined with stable unemployment rate forecast at 4.2% and a modest hourly earnings growth at 0.3% month over month probably suggests that the labor market is cooling a bit but remains resilient. That said, the range from estimates from analysts are wide as ever, going from 50,000 on the low side to 170,000 on the high side. So we'll see how this number comes in. Other things that are notable: the BLS conducts its monthly non-farm payroll survey using a specific reference period. So this particular, for April, this reference period includes April 12th. That means the data primarily reflects employment conditions during that week that encompasses April 12th. Now, why this is interesting is because the survey will have been taken after that 90-day pause on the reciprocal tariff measures. It's not really going to capture any of that economic relief that said U-turn might have provided. But the survey will account for the 145% tariffs that were imposed on China that took effect on April 9th. Other potentially important influences on this payroll print would be we had a spell of good weather during the majority of the month, which may have likely boosted the construction sector. In addition, the logistics sector will be very important as a gauge on the early impact of tariffs and how they might be having on the U.S. economy. And we've talked about logistics pretty much all week. And then we should also pay attention to leisure and hospitality space for any signs that the consumers might be reining in their spending a little bit as the degree of economic uncertainty continues to mount. That said, if the data comes in line with these expectations, would probably, again, serve to reinforce the FOMC's longstanding viewpoint that the labor market isn't a significant source of upside inflation, and therefore the effect would be very, very limited on monetary policy. Should these numbers come in better than expected, meaning higher hires, this would signal that the Fed may hold for longer, and the equity and bond markets might react negatively to that. On the flip side, if the numbers come in much worse than expected, bonds and equities likely react positively as we probably see an uptick in the chances of cut. So lots to think about on this report, and the data is coming out in about 15 seconds.
Wow, that was a great summary. That was a great synopsis. I appreciate that. Yeah, whenever I anticipate a number, though, even if I'm right on my anticipation, the market does something different anyway. So we'll see what happens.
We will definitely see what happens here.
Thanks for setting the table. That was perfect. All right, bonds.
Absolutely. All right. The numbers came in. It was change in non-farm payrolls was 177,000, expected 138. Unemployment rate steady at 4.2%. Hourly earnings, a little bit lower than expected at 0.2%. Expected was 0.3%. And labor, did I say labor force participation rate still at 62.6%. So a little bit of uptick on that. Now let's see. Hold on one second. Let's see. I always like to look at the revisions for the prior two reports. So we did have February was revised down 15,000 from 117,000 to 102,000. And March was also revised down by 43,000. So cumulatively, jobs were 58,000 lower than previously expected. Now, the market doesn't really care about that, but I just like to look at that data because we've had mostly revisions down in the labor market.
Tracy, let me ask you this. I mean, this is a source of conspiracy theory across the globe, right? Where we have, all right, we have a pretty nice number, and then all of a sudden we have, continuous revisions because they, no one cares about revisions. You just mentioned it. It does seem like a phenomenon.
Right? I mean, we had, I think in 2024 total, there was a revision down of almost 1 million jobs.
Yeah. Wow, that's
Isn't that
incredible.
crazy?
Yeah. So Tracy, thanks for popping in. Appreciate that. That was really great. That was a great analysis, and you could see on the chart here we are rolling with on the upside in the E-mini S&P.
And NASDAQ especially. Tracy, you are absolutely the best in this business.
Thank you, guys.
All right. Well, Pax, man, this is just moving right now. I have an intraday chart up. I don't have your Pax lines up here on the intraday. I have too many lines. It makes me dizzy. I usually have one chart side by side when I'm just by myself. But so we had there's that pivot again, man. We just blew through that pivot. R1 was kind of acting as resistance this morning, right during the London initial balance, almost perfectly, and that's why I love these pivot numbers. But we blasted through it. We wicked all the way up to. We made new highs on the session, and now we're kind of coming back down. I think as the market is assimilating all this information.
It was an interesting move right off the bat. The bonds sold off, and the equities rallied. So bonds sold off. That's not going to be. It's not going to be thrilling to the administration. Bond selling off is not going to be thrilling, or the notes, is not going to be thrilling to the administration. But the market, the NASDAQ rallied 110 points, and right off the number, and the SPOOs rallied, I think 30, and now they're just kind of hovering here. Look, I don't know. Yesterday we got about 56.17. I thought, well, we're not breaking, and then we did.
Yeah.
Turned around and gave back. We broke from 56.60 to I think around 50. We broke 60 points in after the close, after the cash close.
Yeah.
So
Yeah,
I don't know. I don't know what to expect here. We need to be limber. For traders, we need to be limber. Use stops. I saw somebody in the chat write, happy Friday, don't take subpar trades. I don't know what's going to be a subpar trade until I take it.
That's right. That's right. No, there's like right now we're kind of back to an era where there's three different stress points. Or the opposite, whatever the opposite stress points are. There's corporate earnings. There's the macro information which we just got from Shy, jobs and unemployment and all that stuff. And then the third one is what's gonna, what tariff surprises are next. So now it's kind of like almost like equal weighted now. Before it was just all tariffs. Who cares about the numbers? Now the numbers and the earnings are starting to matter a little bit.
That's right. Right. Now we're coming back into more normalized trading, and our ATR went from 300. We had a record ATR a week and a half ago, 2 weeks ago. We're back down to more normalized levels of 100, and I don't even know what it is. I got to put up a daily.
I got 100. I'm tracking 157 ATR in the E-mini S&P on a 14-day look back.
There you go. All right. So I have a 10-day look back at 130. So same basic thing. We were at 300 April 11th.
Yeah.
April 14th, 15th. Who's ever heard of that? No, we've never seen an ATR that big. So anyway, yeah, now that we're back down into more normal ranges, there's a bunch of different a bunch of different danger zones for traders that happen. You're expecting these bigger, you're expecting, you know, you get used to tariffs being the only thing that's important. And so you're scouring the news for tariff information, and then you're missing the earnings reports, you're missing the macro reports, you're missing the things that start to matter again that ultimately move us, you know, or that are going to move bonds, are going to be important to the Fed decision. And, you know, you're missing a piece, a component of it. I mean, it's just so many things to pay attention to. And also for traders' standpoint, you know, when the ranges are bigger, you're expecting breakouts constantly. And when the ranges contract, you're trading for those breakouts that don't come. You know, it becomes a little bit more difficult.
Yeah. I just pivoted over to the Russell. I wanted to get your opinion on that. The Russell's up 1.35%. So it's the big winner on the day from a percent point of view. But as we know, over time, it hasn't been the big winner. Are you looking at the Russell this morning or no?
I broke up with the Russell a couple years ago. I dated the Russell for a little bit, and then I liked the Russell a lot, and then I married the Russell, and then we broke up. I don't know. I really did stop kind of paying attention to it. I track it for targets every day, but nobody really trades it in my group anymore, and I don't trade it either.
Yeah.
So I don't know, Jim. I don't want to talk about something I really haven't paid any attention.
Yeah. No worries. I'll just throw one observation out, and that was yesterday morning. The Russell was lagging big time behind the E-mini S&P and the NASDAQ, and then all of a sudden it caught up quick. It's like I got the memo a little late, and then boom, it caught up really quick with the other two. But it was a noticeable difference, a noticeable lag. So this kind of systematic relationship kicked in. Right now it looks pretty. This chart just looks like any of the other ones right now.
The Russell sat at 22,000 for, you know, months and months and months, and the NASDAQ and the S&P kept rallying and making all-time highs. And I'm, you know, long Russell, and it doesn't go anywhere. So I stopped hanging around with that Russell.
Yeah.
But yeah.
By the way, my Sharona is in the chat. Good to see you. Looks like the margin for the MES has changed to 200. You know, here's my thought on, and I'm interested in Pax's thought too. But my thought, margins are your friends, right? They're based on a risk assessment of the market, and they're dynamic and they change all the time. And you know, different brokers have different day trade margins, and which is fine. But it's yes, it's there to protect the firm and the clearing and all that stuff. But really, they're your friends. Margins are your friends. Kind of respect when that changes, because this is like the science at the CME coming back forward saying, hey, this is now the new risk kind of profile of this market. So, you know, maybe taper down on your leverage a little bit.
100% right. Yeah. Margin is not something to hate or to, you know, it's there to protect you. The number one thing for us, you know, if we want to be long-term profitable traders, the one thing for us that we need to do 1,000 times out of 1,000, or every single time we take a trade, is protect ourselves. And if our margins have increased a little bit because our firm is a little bit more mindful of the risk outlay, then that's okay. Trade smaller. We don't, you know, we don't need to be balls to the wall constantly. Take it easy. You don't need to be part of every trade. You don't need to be part of every move or every wiggle. I love volatility, and I'm super prepared to trade it. And I'll trade it as big as any independent. Well, maybe not. Not at this point in my life. But I'll trade it, and I trade it very well. I don't trade quiet markets very well. I don't trade quiet drifting rallies very well. So I know at that point that I've got to raise my personal margin. You know, I mean, it's not, obviously my margins are smaller, but I've got to raise my personal margins to protect myself. When the firms raise, you know, like, so in a macro sense or in a micro sense, right? When the firms raise our margin in a macro sense, then I know that they're trying to protect me and they're trying to protect themselves. And believe me, I've been a part of a firm going under. When MF Global went under, October, Halloween of 2011, that was an absolute nightmare in my life, and it set off a stream of events that have ultimately set the table for the next 2 or 3 full lives I've got to lead in the next 30 years or 40 years of my life. You know, I
Yeah,
don't ever
but
want to go through anything like that again. So when they raise margins, I shrug my shoulders and I say, okay.
yeah, no, me and my partners took $1 million hit on that day too, the MF Global Day, but we got it all back eventually. They did a good job at. It took a while, but the trustee did a good job at clawing some of that back.
Yeah. I got most of it back. I didn't get my I didn't get the profit that I had into my positions. I had a bunch of spreads on at the time, so I was carrying a bunch, and I had a lot of money in my account to carry them too.
Yeah,
And I didn't get that back. I got what they determined was my principal. You know, and that took what 3.5 years to finally get it all back. It was a hairy, scary time.
yeah, yeah. But there's even more controls now than there was then because
Right.
of that.
Yeah.
Which so it's I hopefully knock on wood we'll never see that again. But
Right.
um, in any event, the micro NASDAQ now is we have another. I got 10-minute candles. I'm just showing packs. We have a really nice volume profile with the point of control. Really a lot of candles traded through this 930 level, but we
Yeah.
did kind of close above that R1. I love the pivots, and now we're this is kind of a regular retracement I think going on right now.
You know, so a lot. You're going to see traders talk about all kinds of different things, right? You know, I'm going to buy breaks. I'm going to sell rallies. People that buy breaks, people that pick tops and pick bottoms get killed. Eventually, will get run over. But if you're looking at that price, that 19,932 price, you know, and you've got a
Yeah,
horizontal line on it, you can simply you can make you can make a living just trading that pivot, whether it's an actual pivot or not, you know, in an objective sense for the market, or whether it's just a pivot for you. You're long above it, you're short below it, and you've got very tight stops at it, and you're not going to overtrade it. You'll make money. You'll make money doing that, you know, and you got to keep it simple. This is not rocket science. We look for thousands and thousands of reasons to put trades on when ultimately it comes down to how you are managing your expenses and how you're managing your profit, how you're
yeah,
managing your risk, right? And how you're managing your profit, how you're letting them go. So take it easy. Just look at that 19,009. Look at in the NASDAQ. Look at that 19,931 level, and then look to where it's going, and trade the equidistant swings above it. That's a 100
yeah.
handle rally. That's you know, we get back above that level, take it another 100 handles.
Yeah,
You
no,
know,
I hear you.
I'm just saying I don't know the significance of that level until you put it up. So I'm just using that as an example. I am not saying that you get long at 19,931. I'm just saying that you can
Yeah.
use levels like that as your pivot.
Yeah, so I learned. So this is something I learned from a mentor of mine, a family friend. I don't know if you know Dan Gramza, but Dan has
Yeah,
been in this business a long time.
I
And
know
and
damn
Dan
well.
kind of says when you have this kind of really nice volume distribution, or if you're using market profile, you could come to the similar conclusion. That when you get a really nice dominant point of control and it's a rather bell-shaped Gaussian distribution, he started calling that price happiness. He said, this is the price where buyers and sellers agree to do a deal the most time throughout the period that we're analyzing. And so he called it price happiness. And not always, but oftentimes it does act as a magnet, right? If you think about it, attracting price. Now, maybe we'll develop another volume profile node up here where we're trading at right now. Who knows? But that's why I put this on my chart. And I just kind of look overnight, I don't know, 80% of the candles traded through that level.
Yeah, absolutely. Oh, there's the unicorn. I picked tops and bottoms for the last 18 years and 35 million banked. Hey, you're the unicorn. You're the exception to the rule. Congratulations, Island Time. Um, you know, but remember, this is a marathon. I've known too many people worth more money than you, my brother, that have ended up driving Uber. So be very, very careful, including me.
Yeah, I would just say I'm not good at it. I'm not good at trying to pick tops or bottoms. But I'll tell you one thing that's helped me a little bit is this Mentor Q. Uh, it helps me a lot a bit. The Mentor Q data that I have on my charts, and we don't have to talk too much details about it, but these are, we have gamma exposure levels, we have call walls, we have put support, we have high vol levels that are based on the underlying options trading in the futures market. not the equities, but the future side. And now, and those levels create another area of interest in my mind. So, as an example, when I go down and see previous sessions lows here, I'm going to put my crosshairs right there. That's at 19,755, and I see that there's a gamma exposure level, JAX 3. It's the third biggest gamma exposure level right below that at 19,751, and then we have a high vol level right below that at 19,740. This becomes important to me, and it's also the daily low. But this becomes important to me because now there's three areas of interest where maybe three different sets of traders are thinking about that makes it more important.
Yeah. So we get down to that. Somebody asked a second ago what I mean by pivot. So you're long above it, short below it. And again, if you want to pick a bottom, go ahead and get long at 19,930, and we get below it, you're out. You're not going to wait for 19,900. You get out.
Yep.
You get out
Yep.
underneath it. Now you want to take a long at 19,740. That's a great level, by the way. 19,747 is an old quarterly pivot. That's a flattened zone for me. So we get down to 19,740, get long. We get below it, you get out. It's that simple. You know, you buy 19,740s as a pivot, and we get below it, you're short. You know, and my stops are very tight. I don't lose money. I spend money. I have market expenses. I'm not going to sit here and if I've got 100,000 in my account, that's not risk capital I'm looking to lose, or I'm willing to lose. And I'm going to spend some of that to try to make a lot more. So that means that my stops are going to be tight. And yeah, I get ticked out of a lot of really good trades, but I would rather miss a move, my brothers and sisters, than to lose money, which is why I'm still here, and which is why I've been able to rebuild again in the last 12 years from absolutely nothing. And why I pissed away on my money was because I decided to start to fade markets and decided to start to widen my stops and to trade breakouts that weren't here. Made every mistake that you can possibly make in this business, so you don't have to.
Right.
And
So
again,
there's
go ahead.
the three best things that could happen here, right? Number one, you put a trade on, you make money. Number two, best thing that could happen is you don't put on a trade and nothing happens. And then number three, best thing is not a best thing. You put a trade on and you lose money. So those are the three outcomes, right?
Right. Absolutely. Right. That's it. And I mean, all day long, I would rather, I can't tell you how many times I've been ticked out of a trade or stopped out of a trade that ended up working, and, you know, take a small expense on it and come back. And I got, you know, I think I have 50 handles into it. I bought gold at 29,16. I paid for them at 29.27. I put my scratch stop in. I got stopped out, didn't notice it, came back, we were trading 50 higher, and I thought, "Ooh, I'm in the money." Well, I've missed this entire move. Well, I would rather miss the move than to lose money. This is a marathon, it's not a sprint. I am not the exception to the rule, and I'm not the unicorn. I'm a blue collar trader that picks up my lunchbox, and I go into the mines every day and I try to make some money. Some days I'm going to spend more than I make, but when I find the trade, I'm going to increase I'll go to from a 4 lot to a 40 lot pretty quickly. I'll go from a 16 lot to a 64 lot pretty quickly. And I'll put my feet up and not trade for weeks at a time.
Yeah. Yeah. No, that's great. Going into the mines. I mean, when we started this NinjaTrader 2.0, mission control is like, all right, you got to paint the back of your wall black. You got to put these lights up this way. I feel like I might be in a mine right now, but I don't mind it. It's pretty, it's fun. I just pulled up gold right now. I just wanted to get your opinion on it. This is a daily gold chart. I have my moving averages up there. We had a really nice kind of textbook retracement to that 50%. At 32.42, give or take a couple ticks, and now we're kind of pausing right around that level.
Okay. What a crazy move in gold. What a crazy move from 29.16. I want to measure now everything from 29.16 to 35.09, the high. Within, I think, as I remember, within an hour or 2 hours of reaching that 35.09 high, we were 150 lower. You know, I mean, the market traded 35.09 and then fell apart. And then I think it was the next day. I got to look at a chart. The next day that we were $200 lower.
Yeah.
So that just tells me that gold is drastically overbought, has been drastically overbought for a long time, but that does not mean that gold is going to go lower. You know, we can settle into a range and base here a little bit and then explode too. You know, so who knows? Level to level to level is what is going to protect you in gold. Level to level to level is what's going to protect you in anything you do and keeping your stops tight. If I've got a superpower as a trader, Jim, my superpower is the ability to miss moves and to not be emotionally tied. to not allow myself to get emotionally tied into it. So then I start to try to recreate the move, or I try to, create something out of nothing, or I'm trading in the middle, or I'm doing all kinds of, stupid things that I know is going to hurt me. If I've got a superpower as a trader, it is the ability to miss moves and to not care. There'll be other ones.
Yeah. Yeah. No, that's maturity, right? That's maturity. I mean, as when we were young, we were all hyper aggressive, right? We're all hyper aggressive and cocky and, Lambo mentality. And you get humbled pretty quickly.
There was I posted a video the other day of the guy that was responsible for getting me into this business, a guy named Pat Finley, or Pat Gerandi. He's a SIBO trader. I posted it the other day. If you can find it, watch it. Pat Gerandi is a guy from my neighborhood in the south side of Chicago who talks like a street guy. Tough guy, and had a tough life. Great guy and a great story. I highly suggest you guys watch it. It's on Soft White Underbelly on YouTube if you want to watch that. So he ended up getting booted out of all kinds of shit, and he ended up going into the SIBO and immediately made a crazy amount of money, and ended up starting a big company. He's a very, very smart man. But I was talking about this with my best friend, Frankie Bologna, a kid I've known my whole life. And Frankie and we were all together, growing up in that neighborhood with him. He was much older than us. But Frankie said, why does he talk like that? He's so smart. He lives in Italy for the last 25 years. Why does he talk like that? He's so smart. It's because he wants everybody to think he's a moron. He wants everybody to think he's a street guy from Chicago. Meanwhile, he's the smartest guy in the room in whatever room he walks into. And that man has no fear. That's the point of this whole little diatribe. He's got no fear. He came onto the floor with nothing to lose. And so he made millions. And then he made all those millions. And instead of being afraid of whatever, he created it into more. That which you fear you will create. If you're afraid to lose money, you'll lose money. If you're scared money never makes money. If you're afraid to lose money, that's what you're going to do. If you're afraid of success, you're going to limit your success. If you're afraid of failure, you're going to fail. If you're afraid of these things are going to bite you in the keister a couple of weeks after Easter. They're going to come back and they're going to haunt you. Your weaknesses are in the background doing push-ups, getting stronger when you take your eyes off them with the Lambo mentality. I never had the Lambo mentality. My dad was an immigrant. I worked hard and I banked that money.
Right. All right. So Pax. Let's pivot over to see what the bonds are doing right now. So, and just kind of think about this in terms of what the actual the numbers that non-farm payroll numbers were released right now. And this kind of sell-off in the 30-year Treasury bond has been sticky so far. We don't have a wick at the bottom of this candle. We're still selling off at a 115. 08 32nd print right now. And so, when I think about this, I'm like, all right, is this risk on, risk off? What's going on here with this?
Well, it looks like an old-fashioned flight to safety. Again, they're selling bonds. They're just capital flows. They're selling bonds, selling gold, and they're putting it back into equities. I don't think the Trump administration is going to dig that very much. The opening range in the 30-year is 116 even. So 116 spot zip, right there. We're almost a full point below it. When non-farm came out, we were at 115 spot 26, 27, and now we're at 115.08. Meanwhile, the indices have continued to rally. So the capital flows are telling us that this is a risk on event, or at least it's starting to look like a risk on event, an actual risk on event. So let's see what we're going to do.
Yeah. I'm looking at these daily I've adopted the stochastics. I abandon on a daily chart. I abandon RSI and MACD and Commodity Channel Index. They're all good. It's whatever you click with, right? For an oscillator. And so I'm focusing on these stochastics right now. And some of these crossovers that happen in the middle of the range between 80 and 20, right? And forget about overbought, oversold. That's a different thing. But when these crossovers happen in the middle of the range, they're usually more meaningful based on at least that's my observation. And we look at this, we're getting another one. We are possibly going to get another cross under in the stochastics, which could signal some more downward pressure here for at least temporarily. We'll see if it happens or not. But do you ever look at any of the oscillators?
Not anymore. I did. When I left the floor, I was looking at everything. I didn't think I had enough information or enough knowledge. And so I started to study all kinds of different technical analysis and stochastics, RSIs, just everything. And you know, or even like market profile. You know, I was one of two traders that trade for Pete Stoudemire in '09 after the Great Recession when he was trying to update market profile. I don't use those things anymore. I use market profile to set the market in context, but I don't use it as a trading strategy. So, you know, I mean, I'll look at when I'm positioned, you know, if I'm long from let's say the opening range is 56, we're at 87. I'm long at 56.87. We trade up to 57.20, 57.30. I'll look at some oscillators to help me decide whether or not I want to keep that position or try to add to it, depending on what price is doing. You know, like if we get up to 57.30 and we kind of peter out, I might just take the money. You know, but if we continue, if we've got volume, we've got capital flow, we've got order flow coming into the market, I'm going to add above that. And I'm going to take them to 57.70, and I'll look at a couple of different things. I'll look at the Imuku cloud. I'll look at Bollinger Bands. Not so much stochastics or anything else, but yeah, I'll look at different things then. But not until I'm positioned.
Yeah, we're getting, I mean, you know, 5 years ago, I'd say there's no way we're getting a 57.29 today. But with in these days, we're driving up there right now. We're at 56.90, no wick at the top of this candle. Buyers are just pushing this, you know, higher and higher, driving up to that 57.29 level. We might achieve it today.
Yeah. Oh, sure, we might. Absolutely. Well, we talked about needing a close, two closes to two closes above 56.17, but one close is good enough, you know, and then two closes would give confirmation. That is going to swing us back. Ultimately, two closes above 56.17 swing us back to 58.40 or 58.37 to 40. But we have these big levels that I think the next market goal is going to be that 57.70 level. So we should see 57.30, 57.29 today. I mean, remember how important that level, this whole level is. 57.21 was the all-time high that we broke from. It was the high that we set in July, and we broke from there all the way down to 51.20. So once we took out 57.21, then we were free to reach the you know, I mean, we rallied, we made all-time highs. Then back in November, we made I can't remember what the high was, but we broke back down and made a double bottom at 57.24 and 57.30. So that level has become important from a technical standpoint, old highs and old lows. Now we take out 57.30, and it's a macro level for me now based off of 58.40. So now we take out that level, man, we're going to 58.40 and then back up to the yearly opening range. If we hold 57.30 back down to 56.57, 56.17, 55.85, 55.55, 55.09, and then back down. But, you know, don't look like we're breaking today.
Yeah, this looks like a strong move for
Yeah.
sure. We've seen stranger things happen though, for sure. But I don't think there's a lot of other than I like to call it unplanned news, right? So we have planned news, which we know, Tracy comes on and says, hey, this is non-farm payroll. This is what it means. And then we have the unplanned news, right? And that could be in a geopolitical event. It could be a statement from Capitol Hill as an example.
Yeah.
So anyway, man. Well, listen, man, we're running up against time. I love Friday mornings, man. I love talking to you on Friday mornings.
Thanks, Jim. I love talking to you too. I do.
Yeah, for sure. Hopefully you have some relaxing plans this weekend.
My son, so we had two of my kids had committed to colleges. My daughter is a senior; she's going to go to Miami of Ohio, and then my son Gabriel is a sophomore, junior college baseball player, and he committed to a small Catholic school in Dubuque called to play baseball the next 2 years. He pitches on Saturday, and then I think my youngest daughter is freshman in high school. She's got a lacrosse game against Marist High School, the big, South Side rivalry.
Yeah.
So that'd be fun. And, things like that. And I'm going to get a couple of workouts in, go to mass on Sunday, love my family, love my wife, allow my God to love me and love him back.
Wow. I mean, that's all you could do, man. That's everything right there in the big, a big bundle. Well, thanks for being with me. You're not going to see me next week, so I'm going to be out of town, but the week after that for sure. But we'll be talking. So appreciate you being with us here today, Pax.
Hey, thank you. Have a great trip next week, and I'll see you in 2 weeks, my brother.
Thank you.
Go get him, Sara.
All right, folks. It's Friday. And finally, we're going to be trading the open with some news behind it. So we're going to go ahead and bring in Sara Strat Sniper. She is in the studio in Naples, and she's going to be in here right in a couple minutes here.
Oh, that goes hard. That was awesome. I love that. I was having a good time watching it.
Sara, I got to tell you though,
Jim.
good morning. I got to tell you, our production folks are like the best there is, and this is, this production that we're doing right now, and I appreciate it because I've been behind the scenes forever, and now when I am like so happy to be here, and I see stuff like that, I was like, you guys got it going on. So this is kudos to you guys for sure. But thanks for being here, man. We have a number. Maybe we have some movement for you on a Friday.
Yeah. Well, yeah, let's talk about it. Hey, first of all, where are you going on vacation next week?
So it's kind of my godson is being confirmed. He's being confirmed in the Catholic Church, and I'm his sponsor. And so I'm going to Jacksonville, Florida for a couple days, and I'll be staying with some really close friends. So I'm looking forward to a long weekend down there.
Oh, you're going to be in Florida. Jacksonville, I think, is pretty far away from Naples, though. I think it's like a 9-hour drive, if I'm not mistaken. I don't know Florida so well, but I was going to say.
No, you're right.
Come
You're
down
totally
to the
right.
studio.
Florida is like, I'm going to come down eventually, but Florida is like, people don't understand how big it is. I mean, if you wanted to drive from Jacksonville to Key West, I think it takes like 2 days. It takes a long time.
I think that would be a 14-hour drive. It's long. It's very long, obviously. Well, cool.
Yeah.
Well, enjoy the Florida weather. It's beautiful here.
At my age, it's 3 days. But anyway, awesome. Well, listen, I'm gonna let you do your thing, and I'm gonna sit back and take notes, and wish you the best of luck on trading the open today.
All right. Thank you, Jim. I know he just hopped off, but I love listening to them talk on Friday mornings. They're just so cute and honest, and I just love listening, to them talk back and forth about real life stuff and the struggles. And Pax was saying he's an emotional trader, and, we all kind of are, so we have to dial that in. But it's just good stuff, good things to hear. And, we are human. So trading is hard because we are human and we have emotions. So, okay, let us talk about the market. So I don't know, those who follow me knew we were super duper bearish in March. I'm kind of going way back. We were super bearish in March because of the Strat setup, which was a 2 up, 2 down reversal. So we were bearish for March. Then April kind of happened and things changed, as things do. So with the Strat, this candle is, oh man, my eyes are really bad, guys. Sorry. 4-7 in this one. So this was basically the first week of April. And then what happened was we got a gap down open, and in the Strat, we use something called time frame continuity. We use multiple time frame analysis. We use broadening formations. So when this candle occurred, gap down, they sold it down, they came back up, they changed the candle color from red to green, which most of you traders probably know this as a red to green move. We call it a continuity change, but it's the same thing. So the candle was red, it turned green. We were at some form of downside exhaustion. Let's see. We took out this pivot low from January of 2024. And also ES took out, I believe, took out last year's lows by just a tick. So this is considered an exhaustion level. which we will mark on the chart. That is an exhaustion level. And then you'll see we took out 2024 lows, and then that's where anybody who was short started covering. So you have short covering with also natural buyers. All right. And then so I'm just kind of giving you a little recap of what we've been doing. This week was an inside week all week. We did not trade this week. I stream on Mondays at Strat, and I was saying last week, that I don't think we're going to get back down here. What I think is the most likely scenario is we take this inside week and go down, but then we reclaim the inside week and we end up going outside week. And that's in fact what happened. If you guys want, I can try and get a clip of it for you, just because people love to call us hindsight traders, and I think it's hilarious. Just stick around with the strat and you'll see, like, none of it's hindsight. It might be hindsight to you because you didn't hear it when we said it, but never hindsight. Always what is happening right now. And then I, this week, made a post on Twitter and said that if we can remain above last week's high, so what is this level? I got a lot of orange. Hold on. If we can remain above 55.62 and a quarter for ES, but basically for all of them, just above last week's high. So above last week's high, above last week's high, above last week's high. We said that if we are above last week's high based on strat scenarios, time frame continuity, we had a new monthly candle flip. So I'm going to talk about the monthly in just a moment. But if we're above last week's high, we're long. We're super long because, again, we took out last year's low. This is an exhaustion level. So that's, again, where you're looking for reversals back up. So either we're going to take the year down and continue to confirm it, but this week, last week, showed us that they were not going to continue to confirm the downside, right? Because they went down, came back up. They're not going down. We're going up. And you can just see it. It just happens on the chart. So above last week's highs. And this is also in the strat world what we call a simultaneous break, which I think I talked about last week, which a lot of people get confused and like don't understand what it is, but I will cover it again. So we've got 4 futures here, right? We got ES, NQ, RTY, YM. A simultaneous break. If you think about the word simultaneous, it's just a bunch of things doing the same thing at the same time. So that is what happened. All the futures went above last week's high and are able to hold above last week's high. So until that's not true, we're bullish. Now, it was a little bit of a struggle in the beginning of the week because we kind of teetered around that area for a while. But ultimately, what happened, hold on, I'm going to do the monthly charts before I go into the daily charts. So with the strat, any new candle, whether it's the yearly, the quarterly, the monthly, the weekly, the daily, presents new strat setups, new opportunities. And if you look at the monthly candles, you're going to notice we have hammers across all 4 of the futures, some more hammery than others. Still, like I said earlier, NQ is strongest because, well, one, it's trading above last month's highs. But if we go back to last month and we if we ignore the open of this month, you have a red hammer on ES. You have a green hammer on NQ. Now, hammers don't have to be green, but it does kind of encourage confidence. Like, okay, well, they're buying it because it's green. Red hammer, red hammer. And then where NQ closed at the end of last month, it was the closest one to going 2 up, 2 down, 2 up reversal. And what we mean by that is we're always forward thinking, what is the next 2? And since this was a 2 down, the only possible reversal is a 2 up. I can pull up the Strat combo sheet. I'll do that real fast because there's only so many ways price can reverse or continue, and we know this. It just is what it is. So where's the 2-2? Right here. So if you envision NQ in April being a 2 down, the only reversal is a 2 up because we're closer to going 2 up. Now, the only other thing that could have happened was we stay inside and don't go anywhere, which would be super boring and nobody would like that. But this is what's happening right now on NQ. So it's the strongest one because, again, it's above last month's highs. Nobody else is yet. ES is getting close. So what does this mean? Let's go to the quarterly. Without spilling the beans too early, we are anticipating new all-time highs in the next 1 to 2 months. Now, I don't know, I can't time it perfectly, but what happens is here, this is the quarter. So we triggered the quarter down. We are now trading back above last quarter's low, and we know how outside bars form and happen. So once we start coming back into the range, and we do this all the time, like we will draw a range, and a range can be just a previous candle. It can be a swing high, a swing low. But once we fail to stay below the range being this rectangular box, we're looking to take out the other side of the range. So we are looking to go outside quarter and, again, make new all-time highs. Now, once that happens, then we don't know. Once we're at new all-time highs, which also I kind of hate trading when we're up at all-time highs, but it is what it is. The volatility just slows and it's kind of boring for me. But that's what's happening here, right? And if NQ, exact same thing, last quarter being your range, we're back inside the range. So we're looking to go outside quarter. I hope that makes sense. Does everybody know what an Shab? Oh, Shab's here. Shab, what did we say last night about the futures? It was going to go what? She's a little Strat learner on the side, and she's kind of a natural. We had dinner last night to celebrate Tracy's birthday, and we were talking about the futures. 3 up. Yes, ma'am. My girl. I love her so much. And then, okay, so does that make sense to everybody? Everybody knows what an outside bar is. An outside bar, also in not Strat talk, is an engulfing bar. Let me find one. So here, like last week, this 3, this is an outside bar. This is what so there's only 1, 2, and 3 in Strat. A 1 is an inside bar, meaning the high and the low fit completely inside the previous candle's high and low. I'm sorry if this is redundant when I come on in the mornings, but I want to kind of teach people our verbiage just so they know what I'm talking about. So an inside bar we call a 1. We have 2 up and 2 down, which, hold on, I like to go 1, 3, then 2. So inside bar is a 1. A 3 is the opposite of a 1, basically. So it takes out the high and the low of the previous candle. So that's an outside bar, which we call a 3. Then we have 2s, which are directional, and there's 2 kinds of 2s. There's a 2 up and a 2 down. Candle color does not determine if it's an up or a down. The direction that it broke the previous candle, that is what determines if it's a 2 up or 2 down. And again, most people will see this candle right here and think it's a 2 down, but it's not a 2 down. It's a 2 up because it broke the upside of the previous candle. Even though it's red, it's still a 2 up, which we also will call this a failed 2 up because it failed to stay above the previous candle's high. This one here, kind of the same thing. It's a 2 down because it broke the downside of the previous candle. Yes, it's green, and that's fine, but that does not make it a 2 up. So people get really confused when they look at the candle color. So you're not referring to candle color, you're referring to the direction that it broke the previous candle's bar. So there's really 4 candle types in the strat. The inside, the outside, 2 up, 2 down. So I like to just kind of cover that before we get too into it. Okay, so let's go to the daily. What happened? What day was this? Wednesday. Wednesday was an awesome day. It was everything we wanted and more. And if you guys watched the NinjaTrader live with Kane, he was going long at the exact same time I was going long. And I will explain why. I'm going to put the replay mode on, and I'm going to show you why. So so this candle is a big green 3. So was this one. But you have to understand it did not start that way. Okay. It started, and this is also part of like you have to learn how a candle forms. So the open of a green candle is the bottom of the body. So there's the open. Okay. So we opened inside. I'm going to make this bigger because if I can't see it, I'm assuming you guys can't see it. And that's just how my brain works. Okay. So we opened here. We triggered a 2 up, 2 down reversal day. So none of this up here existed yet. And we did short this on Wednesday. Okay, but what happened? We hit target 1, target 2. The next target was way too far away. We did not think that we were going to hit that. And then so what happened this day? That's really awesome. And Kane nailed it. There was also 10 a.m. news this day. But what happens is once you've taken out 1, 2 pivots, this becomes a downside exhaustion level. Okay, so now we were short from here to here. Great. Then we look to flip long because that's where, so reversals are going to happen at downside exhaustion levels. And you'll see right here, and I wish I could pull up my chat right now, but it's too much work to find it. That was the exhaustion level, this little dashed pink line. Then we got a 2 down, 2 up reversal right here. That was the low, I think, of the week. Yeah. And we called this setup out in our chat room, Alex and I. 2 down, 2 up reversal. And then they just have been gone ever since. So even if you just took this entry and let it go and then put your stop to break even, you're so good. And Kane, it was funny. He's hilarious on stream, by the way. If you guys don't watch him, you should watch him. He is an ICT trader, but I was listening to him and I'm like, it's just so funny, the similarities between Strat and ICT, because he was talking about new candles, candle flips, candle opens, which is, so like new candles, that's new setups to us. He was talking about candle opens. That's time frame continuity to us. He's talking about liquidity, which is the bottom of our broadening formation. It's downside exhaustion risk. So it's all the same stuff. It's just, I don't want to say this because I don't want to make people mad, but it's the same stuff. And if you can understand how price action works and when to take profits, when you should take profits. So we were short on Wednesday. This was the level where you want to cover or take partials or fully exit and then wait and see what happens. And then you can flip long, go the other way. So it's really awesome stuff. So that's what happened on Wednesday. And we ended up going outside day, which was what we said was likely. Because right here, oh wait, here. This was the exhaustion level. Do you see where that 15-minute reversal occurred just looking at the daily chart? It's beautiful. And you're not averaging into a loser because that's not what we do. That is what used to, it didn't wreck me when I was a new trader, but it gave me lots and lots and lots of paper cuts and lots of anxiety trying to average into a losing position. it was so bad for my psychology. I was like, I can't play these like oversold bounces. But the thing was, if I would have known what I know now, the thing about oversold bounces, which we don't use these terms at all, but they happen at downside exhaustion levels. And that's where you need to be looking for some sort of reversal or change in continuity, other than just looking at the RSI and being like, oh, it's oversold. If you don't have this level marked on your chart, you're going to think it's oversold, really early on. And then people yesterday on Twitter, it was funny. Alex was on stream and he went on Twitter and he Googled hi Maria. He Googled overbought or searched overbought on Twitter. And all these traders are like, oh, it's so overbought. Like we're going to, we're looking for a correction. And we don't make fun of them, but we feel bad for them because we're just like, well, bless their hearts. Like it just doesn't work that way. We have full time frame continuity in our favor because we got new months. Okay. So what color is the month? The months are all green. So we have green months, green weeks, 3-2 continuation. This is a broadening formation expansion. So we fully expect ES to go and trigger last month's highs and then get up here to this pivot. Okay. And then again, we should be, as long as we don't reverse on the weekly chart, and that's always like the caveat, right? Like our monthly setups are our monthly setups. So 2 down, 2 up. My drawings all got deleted somehow. This laptop did an update, so it's not like I had it yesterday. But anyway, big 2 down, 2 up. We're looking to make new all-time highs on the monthly chart. Now, the lower time frames can kind of slow that down or change things, and that's why we are always looking for our lower time frames to confirm or negate the higher time frames. But again, we've got potential outside bars. This is the quarterly charts. We have potential outside bars coming. So we're just going to keep monitoring. And I'm proud to say, so I'm not a swing trader. I want to be. I've tried to be so bad. And I love the higher time frame charts, but I'm very happy to say that I went all in I have 2 IRAs. I have a Roth and a regular IRA, and I'm swinging. So that's good. And I'm not planning on exiting my swing. Actually, I think what my plan is, I should solidify this right now. I think my plan is to take partials, probably take half off here. So I did 1 IRA is in like SPY stuff and 1 IRA is in Q stuff. So once we hit that same target objective, I think I'm going to take half off and then move my stop to break even. I don't have a stop in right now because I don't need to. I mean, the chart's doing exactly what we want it to do. So I think that's my plan. And then I'll hold maybe I'll re-enter. I don't know. I don't have a full plan yet. All I know is I'm in, it's going good, which is good. And I don't want these to be super long-term holds because I bought the 3X ETFs for the IRAs, which you're not supposed to hold long-term, but I've only been in it for like a week and a half, so I think that's fine. Hi, Austin. Austin is a mod in our Discord. TT Trades. Yeah. And I shouldn't say his name. I always want to say his name. He basically trades the Strat just with, ICT concepts attached to it. But he also trades like 2-2 reversals. Do you teach courses? Yes, we do, but we're building a Strat scanner, which has taken up several months of our time and energy, so we've not done one. I don't think we're going lower. And just like my Twitter post, if you saw my Twitter post, I said the line in the sand is that we must stay above last week's high in order to remain bullish, which you can see we are. And the same holds true for the monthly setups. And again, NQ is the only one that's triggered the monthly setup. But as long as we stay above last month's high, which for NQ is, hold on, this is 20,044, the pink line. As long as we stay above that, bullish. You can't not be, because price is going up. You cannot dispute that fact, right? That's why we love the strat. It's just, it's very black and white. It is what it is. It's not subject to interpretation. It's just what we know to be true. And Rob made a, like, I don't know if it was a video, but he got with, what's his name? Joseph Burns on NewTrader U and made this article, I guess it was an article, called What Do We Know to Be True About Price Action? And you can't dispute this. Like, every strat trader out there, and this is also what's so beautiful about the strat, knows, hey, what's a 3-2 continuation? Where do you enter long? Everybody knows we get long above, if you weren't already long from down here, which back here had a lovely 2-2 reversal on a Tuesday. I can show that, but we're getting pretty close to the open. So here, okay, let's talk about today. So as I was talking to Shab in the chat, our goal was to go outside day, which we've already done. So what happens is this puts us, since we took out yesterday's lows, and again, the same thing I was showing you on a monthly time frame or a yearly time, it's all the same stuff. So if you view yesterday as a range, and you, I don't know if you can see it, it's really small, and you tick down below it and cannot stay below it, so that would be the line in the sand. If you were to be short, you have to be under yesterday's lows. Otherwise, price is not going down. It's super simple. And Shab called this last night. I was so proud of her. We're going to take out the other side of the range. And it's so funny because I used to get murdered by outside bars, but I didn't understand what was happening. Now I understand what's happening, and they're my favorite kind of bar. So ES has also done that. It took out yesterday's lows by 3 ticks. And what failed to stay below yesterday's lows started coming back through. Where are you going? We're going outside day. We love an outside day in the strat, in the Discord. We just love it. RTY and YM had different setups. They just went 2 up continuation day. And now we don't really have any other nearby targets. So I wish we could have gotten on earlier when we were somewhere, you know, near yesterday's lows, because that would definitely be what we were targeting. So now this puts us at short-term exhaustion risk. And it doesn't mean that price has to reverse or is going to, but you can usually expect corrective activity at exhaustion levels. And that just is basically means profit taking. You can expect profit taking at these kinds of levels. And again, we don't really have anything close by. If you're an ICT trader, you could use the CE, which I had marked on my chart yesterday, and today it's gone, of 722.75. It's just half of this wick. But we're kind of in a range. So this, I mean, we could also just blast right up there, but I don't know. Since we've already gone outside day, I feel like that might be all the juice that we get, but we'll see. I'm going to pull up Crude. Just for those who trade it, I really don't. Remember, I talked about Crude's trying to come down here. But we have a new month. So far, it's green. in your broadening formation, it looked like this. Like we made slight higher highs here and slight lower lows back here. So if you view, again, it's all about blending your eyes. But, okay, so about the range. And people that trade boxes, they're basically trading the strat and they just don't know it. So if that was your range and you were unable to stay above the high, where are they trying to go? They're trying to go down here. So this is the target. And you have a 2 up, 2 down week in force, running out a week though, so it's not going to happen today. But let's say this candle closes like this today. On Monday, you would short there, target here, here, and the bottom of the box, right? Or the range. It's really range. I don't like to say box. I'm going to remove all that because that drives my eyes crazy. Oh, look at that. Oh, we talked about this last Friday. That was cute. We talked about this red 2 up, closer to going 2 down. Boom, target hit. The strat doesn't lie. See that? That is a strat setup. Where is my strat setup? Right here, this one. 2 up, 2 down, target. 2 up, 2 down, target. It's pretty awesome. Okay, so we've gone outside day. I should have probably gone into the smaller time frames already, but whatever. Elaine Bennis is teaching the youth of the world. Hi, Shanti. Thanks for coming. Hi, Sand Dollar. Making the effort. Somebody made a troll name. That's funny. Yeah, Tanya trades on Monday. Kane trades on Wednesday. Yes, I am, well, I'm not long on ES. I'm long other things, but basically ES, a derivative of ES. What's my X name? It is, let me type it. It's at, okay, I don't know how to work Apple products. Oh, there we go. At Trade Sniper Sara. That's my actual handle. So that's my actual handle, but my Twitter like name is Sara Strat Sniper. Hello, Jamie. Oh, thank you for posting that. Yep. I can't really post links because it's not my Apple iPad. It's Peter's. Thank you, Peter. Okay, what's going on? So again, we don't have any nearby targets. Where, okay, I need that wick back. And you'll get good at practicing and seeing broadening formations, which most people hate because they call it a stop hunt. But once you understand what's happening, you're going to love them. So high, low, new high, new low, new high, new low, kind of got stuck inside, but still made a new high after a new low. So there's your broadening formation. And if I looked at that on a higher time frame, it might be a little smoother. But still, we're just looking for compound outside bars all the time. And okay, what that means is, again, if you can blend your eyes, blend candles with your eyes, that's a swing high, that's a swing low. This is a swing high, that's a swing low. So do you see how this box is bigger than this box, meaning this is an outside bar? This box, bigger than the one before it, right? This is a new low, and it's made a new high. So do you see how range expands like this in a broadening formation series? It's awesome. And you look to find reversals at the bottom and trade it back up, just like Kane did on Wednesday and also like I did. And at the top, you look for reversals back down. So yeah, we're kind of, like I said, we've hit outside day on ES and NQ. So we're at potential exhaustion risk. So you can expect profit taking to happen here. And that's exactly what you're seeing, because that is where well, I don't want to say that. I've got ICT on the brain, but like smart money traders or smart money, like that's the target. So breakout traders, if they're trying to get long up here, that's not what you want to be doing. That is where the longs are taking their profit, right? We want to be long coming back through the range. Let's look at the 4-hour chart. Oh, beautiful. Right here. 2 down. This is a 4-hour. This is a 4-hour chart. So you add a 2 down. What's the next 2? It's a 2 up. And it takes out this target, that target. And the broadening formation's still here. Like, it just looks a little wonky. It doesn't matter how you draw the broadening formation lines. And so many people get really confused on broadening formation lines and drawing them. It's not about drawing them. It's about understanding when we make a higher high or a lower low. Okay, so see profit taking. You can expect that to happen. How much time is left in this candle? 22 minutes. I bet there was a 15-minute reversal. There sure was. So that was the target for the day, right? To become an outside day. Then what happened? You got a 2 up, 2 down reversal. Didn't really go anywhere the first 15 minutes, but it didn't reverse against you. And it just hit its target, which was right there. On a 5-minute, that's probably, nope, it's not a pivot low, but. So again, targets are where you expect profit taking. How do I get this? Let's see. Yes, Austin is very good about not trading inside days. Hey, fat fish, don't worry about it. Don't feed the troll. Don't even draw attention. I'm really good about not giving trolls attention. Because who are they to me? No one. So the 15-minute did its job, hit its target. Let's look at the 30-minute. So the 15-minute triggered the 30-minute reversal, but you can see it's not staying down, so we will wait and look for actionable signals. The problem is, like I keep saying, we already hit our major target for the day, so I don't know. The next targets are pretty far. I don't think ICT copied the Strat, but I think both Michael and Rob really understood price action. So what they do, they stop some people out looking to go back the other way. I don't know where an NQ target is. I got to find it. And again, we use multiple time frame analysis. Oh, wait, there's a target. Okay, so NQ is likely, NQ at least has a target. ES does not have an immediate target, just that CE of that wick. You'll notice RTY also does not have an actual target. I mean, it's very far away. There's no way we're getting up there. So I kind of default to this kind of stuff. Oh, that's not what I want there. YM, same thing. YM, this is an ICT thing. Does have a volume imbalance here, so it's going to want to trade up there. But again, they're all trying to trigger their monthly hammers. So that is where price is trying to go. So NQ's got a 5-minute hammer in force, trying to come up here and then to a new high of day. And then if we can get a 15-minute, this would be a 2 down, 2 back up, but we got 2.5 minutes till this candle closes. And then NQ would want to reach this target. We'll just call it 20,200. It's 2199.5. So we're just kind of waiting. When things occur matter. So we want to see a new 15-minute candle. And then your trigger would be a break above this 15-minute candle's high. Which is right at outside day magnitude or target. Magnitude, we use the word magnitude. It's just another way of saying target, or like for our strat setups. So like on a 2 up, 2 down, your magnitude is your profit potential basically. So from your trigger to your target, that's what we call magnitude. Smiling Buddha. You're seeing reversal for next week. 3, 2 up, 2 down, SPY. You're nowhere near doing that. Nowhere near it. We're likely to close this week at the highs. How are you going to reverse that? You're a lot closer to going, what's the next two? Is it going to be a 2 up or 2 down? If we close at the highs, we're going to go 2 up continuation to, again, try and trigger the month and hit this monthly pivot. You're nowhere near. He's talking about a 3-2-2 reversal. He's talking about this. Nowhere near it. So, no. And we had, hold on, I want to pull up a chart. We had Amazon and Apple earnings last night. Or whenever. Oh, that's funny. Amazon was like way down here. Oh, this is awesome. So Amazon went outside day. That's funny though, because after hours they were down here. I guess they gapped it up today. Again, how do outside bars form? This is your range. They open here, trade above previous day's high, fail to stay above the high. Where are they trying to go? Previous day's low. Boom. Bada bing, bada boom. It's the same stuff. And this could be all you do. If you're a trader, this could be all you do. Just like this day. They gapped it up, took out the previous day's highs, failed to stay above it. Where did they go? The previous day's low. You could just be an outside bar trader. That's all you have to do. Are you going to have setups every day? Well, probably if you have a scanner. Like failed 2s go 3. And then, Apple. Apple is a kicking pattern. They closed yesterday near the highs. Opened lower. They took out anybody long since 423. So, do they get a reversal? Not yet. A reversal would look like an inside bar and up to make a new high of day, or a 2 down, 2 up reversal, but you'd prefer it stay inside and then go 2-1-2 up to make a new high of day. All right, 15. Okay, no, we did not get a 2 back up. We opened inside on, so, all right. You got red 60s, red 30s. ES seems to be weaker. And potentially could come all the way back down through all this stuff. Because again, you're at exhaustion risk. That's where the long target was. You can even go to a 5-minute. You're going to find the reversal. Ugh, this is such a good trail example. So here's the outside day target, right? So you take profit here. If you leave a runner, you just trail on the 5ers. When was the first time a 5er reversed? Here. So you actually would have gotten an extra almost 10 points, right? Just by trailing on the 5-minute. That's how you can keep a runner and trail it. We got a 60-minute flip on the futures coming in basically 11 minutes. But this would be a 2 up. We're a lot closer to triggering 2 down. So the target would be there if it triggers in 11 minutes. What's the 4-hour look like? Oops. Just green, but again, hit exhaustion. This was such a nice 4-hour on NQ. spill. I have been playing broadening formations on a stock that I was long on. I have been exiting when longer term highs have been taken out. Good. So taking profit and going back in when it's taken out the lows. Over 15 months, I'm up 100%. That's awesome. I wonder what the ticker was. Can share if you want. Thanks, B Trader. We do not use candle bodies as targets or stops. Well, you technically can use candle bodies as a stop, because say you're long on like a here. And I think that 4 hour was nicer. So say you're long on the 4 hour. You want it to go immediately, and if it doesn't and starts coming back through, I mean, your stop can be even tighter because, again, you know how outside bars form. But you could use, yes, the candle body, which would be a continuity change. You could use this as your stop, yes. Because it triggered to the upside, so it would have been green, because that's the open of the candle, right? So it triggered to the upside. If it starts failing and then flips the candle from green to red, it's not doing what you want, and you need to exit. And on a lower time frame, you would have seen some sort of reversal earlier, like a 15-minute time frame or whatever time frame that was signaling that the 4 hour was going out of force. And we say, we say in force, and all in force means is the price is above its trigger. So just like you can see right now, NQ is flirting with the monthly trigger. So in order to be long for the month of May, we need to stay above the monthly trigger. But right now, all you're seeing is short-term profit taking because we made new highs, right? So anybody who was long in day trading is going to exit here. So that's the day trader's exit. And it looks like we are going to trigger that 2 up, 2 down 60. So we never did get that 15-minute trigger to the upside. It came real close, didn't trigger it. Then what? You got a 5-minute 2 up, 2 down reversal. If you're scalping, this is your target. Because that is the target on a 2 up, 2 down reversal. 47 points on NQ. Which is like close to $1,000 in like 7 minutes. Pretty awesome. So if you're trading a mini. Got a flip in 6 minutes. You'll notice RTY is the weakest of the bunch because it did not make a new high. Also, RTY is pretty stuck inside. If you view this as your range, this whole candle is stuck inside the previous candle's range. So if we went to like a 4 hour chart, probably you're going to see an inside bar or a compound inside bar. This would be a compound inside bar. I wonder if I have the 6 hour chart. Let's see. 6H. There you go. That's so you can just see. You might not be able to find it on a time frame, but you can always find it if you can learn to blend the candles with your eyes. So like obviously that's an inside bar. SPY yesterday was awful if you looked at the 2-hour chart till it wasn't awful. Oop. So this is what we call mother bar problems. So you have this opening range. This is a 2-hour chart. Oh, I have multiple 2-hour charts. You have a 2-hour chart. So mother bar, inside, inside. So your actionable signal becomes when the inside bar breaks. So let's turn off replay and see what happened. So the inside bar broke, boom, took out the mother bar. Not a lot of magnitude, but if you were trading 0 DTEs, you might have got a nice little gain, but so yeah, just all ranges. There's just not much. There's not much going on since we hit our outside day magnitudes, which I pretty much came in and said, hey, like the chart did its job already, so I don't know what we're really going to get to do. But if we get a 15-minute 2 down, 2 up, so this candle closes in 3 minutes. Okay, let's hold on. So what you'd want to see is a 2 up and then go take out that target. But until that happens, there's just nothing to do. So again, RTY is stuck inside a higher time frame range, and it's an inside hour. So not only are you stuck in this leg, you're stuck in this candle. So we say, how are you going to get out of that? Well, you're not going to get out of it till you break an inside candle's low and then target there and there, or an inside candle's high and target there and there. So we're going to take out this mother bar range at some point. It's just which direction does it go? So if you go inside 60 and down, you're going to take out the downside. If you go inside 60 and up, which has a long way to travel to do that, you're going to take out the top of the range. But with NQ, since we have full time frame continuity, we would prefer to see a 15-minute back up to take out this target. And NQ is kind of the one I'm gravitating towards because it's the only one with an actual target. I don't like to use the 50% wick as a target. Like really, I like real targets. So we'll see. We'll see. So full time frame continuity kind of refers to you and your trading style, but you want 4 time frames in your favor. So if you're, let's say you're a longer term, let's say you're an investor and you're trading, you know, you're not in and out of the market every day. So you might use the year, the quarter, the month, and the week. So the higher time frames. And if you're a day trader, you can use the day, the 60, the 30, the 15, the 5, kind of any combination of those things. But day traders should also be paying attention to the weekly candle color. But it's 4 time frames in alignment. That's what you want to have. And if you notice, we've got the month is green, the week is green. I know these charts look funky, but the day is green, but the 60s are not were not green, but 60s have immediate control over current price action, like what is happening right now. And so it's hard to want to be long when the 60 is red, even though you know this is most likely just corrective activity, it's profit taking, that's fine. You want to look for ways back in on reversals back up. So we need to mark them so we can be ready if we get reversals back up. So the potential reversal back up, why didn't that do that? On NQ is a break above 2115. Okay, so that's a potential reversal up on the 15-minute chart. But on the 60-minute chart, we have red 2 up candles. So what's the only possible reversal after a 2 up? It's a 2 down. So we're also going to mark our 60-minute downside triggers. Sorry, I'm not great at talking and clicking. And until one of these things happens, you shouldn't be doing anything, right? You don't just want to be sitting there clicking buttons. Now let's see if we have a 5-minute that can potentially trigger. No, we don't. So that's, we do this as well. We look for domino trades, which yesterday was so fire. We had a 5-minute to trigger a 15-minute to trigger a 60 that gave us a 5-minute ad. And it was awesome on NQ. It was absolutely awesome. I wonder if I could pull up I'm going to try and pull up my Twitter. So we're getting really close to triggering the 15-minute reversal to the upside. And this candle still has 12.5 minutes left. So they're about to trigger the 5th. I don't have an alert on that. Ugh. All right, what am I doing? I'm not signed in on this computer. Let's see if this works. They sent me in. Okay, so NQ triggers the 15. Right? So new high of day is target 1. All right, what's my verification code? Get, boy. And this is an awesome example of how we enter trades, and we enter winning trades and winning trades immediately. And if they don't immediately go, we are out immediately. 7, 6. What did I just, oh, wrong screen, sorry. I just want to show you guys this if you didn't see it. I'm going to pull this over for a second. I don't get out of here. How do I get that off? I don't know. What it said was we took a long entry from the bottom of our broadening formation to target new high of day and trigger the month. This is on NQ. we were also blessed with a domino trade where the 5-minute triggered the 15, which triggered the 60. And it happened on the 60-minute flip. So first picture, this was the morning open. And I said in the chat, NQ satisfies its broadening formation to the downside, meaning it took out the lows. So if you were like high, low, new high, new low, new high, new low, that is downside exhaustion risk. And then I said, do we get a reversal back up to trigger the month? The month being the 20044, right? Next picture, this is ES, but they all had the same simultaneous setup. So we had an inside 15er, but I know this little clock is in the way, but we had a 5-minute actionable signal. So off the Strat cheat sheet, we had a 5-minute actionable signal to trigger the 15-minute, to trigger the 60-minute, and the goal was to go, new high of day. Oh, and you can see it down here. This is how we talk. This is all I say. 5, 15, 60. Everybody knows that means it's a domino trade. So I'm entering on the 5-minute to trigger this 15-minute, to trigger the 60. So you can get a great entry instead of just entering up here at the 60-minute, right? At 6:54, you can enter at 6:46.75 because you know that you've got all these setups that are about to trigger. And then, do you remember the NQ picture at the beginning? This was the downside exhaustion right here when we took out that low around, I'm eyeballing, around 19.9. Same thing. We had a 5-minute to trigger a 15-minute. So you can even enter here, add on the 60. Then there was a 5 there, all to get up to the monthly trigger. This was the most amazing little broadening formation. Okay, anywho. All right, NQ is still trying to make a new high of day. I'd like to see them bust that. Get boy. NQ is still strongest because, again, we are above the monthly trigger. We are not triggering the 60. So we can, I probably shouldn't have deleted it. I'm going to leave it there. Tom, I don't know if I said good morning to you or not, but good morning, sir. So like I said, somebody said, do you like 5772 as an ES target? That is the target. I don't think we're getting there today, but that is the target. That is the monthly trigger. It's actually 5773.25. So we are trying to go take out last month's highs. That's where price is trying to go. Somebody asked, in alignment for color or the up or down? Color. Green, 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 green. Or red, 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 red. Thank you for hitting the like button. How many people do we have? 17? Kane was funny yesterday. He had what do you have? He had like 1,300 people on and only 300 likes. And he goes, 1,000 of you are lazy. And that's true because just hit the button. Help us out. We're here to help you guys. Help us out with a like. Got a bunch of great people on here all the time sharing their expertise. Especially Tracy. She kind of blows my mind. I don't know anything about economics. You all need the Strat. Adam, given that we're inside 4 hour and outside day and inside a broadening formation, would trading here be not high probability? There we go. New high of day on NQ, which was the target. Give examples of smaller, like internal broadening formations. I'll draw a picture. How about that? It's easier than trying to find one. How about that? Okay, so we have something called internal broadening formations because when you're stuck inside, oh, so Lonky, where's my oil example? I'll just draw it. I don't want to go look for it. So say you have this big range, right? Big leg, whatever. Price is it's tightening. It'll tighten inside of here, inside of the big range, but it'll do it in a series of broadening formations. The oil example is really good. We had a big mama broadening formation inside, or we had a baby, I like to call them. We had a little baby broadening formation inside of a big mama broadening formation. Okay, so if you did enter and you're day trading, you would look to take profit at a new high of day because that becomes new high of day exhaustion risk. And then you can leave a runner to see if we can get up here. But anytime you make a new high of day, that's potential exhaustion risk. And you can see, here, let's move this. It's annoying. You can see that profit taking is happening. And if you want to get the most profit, you can go to a 1 minute chart. Let's go to a 1 and wait for a reversal. Okay, so if you were trying to trail at a new high of day, you would have exited there, which is lower than actually taking profit at a new high of day. But if you took profit here and then left a runner, if you're trying to get max profit and using the 1 minute charts, that's where you'd close the rest of your position. It's not to say you can't re-enter because they just made a broadening formation. High, low, new high, new low. So they'd be trying to make a new high. Do you see how that happens? Because this is a pivot low here. So anybody who was long in using trend-based stops, this is why broadening form. My neck is itchy. I'm sorry. It's probably really red. I have sensitive skin. But anybody using trend-based stops would have their stop here. And price action traders know that, right? So we know where your stops are. So when we take your stops out, just like that, and reclaim, where are we trying to go? We're trying to go to the other side. So and this is why people call, oh, stop hunts. No, this is just how price works. It's not a stop hunt. Nobody cares about your stop. You're not that important. This is just how price works. So get with it. And if you're a higher time frame trader and you're you're still good. No need to get out until you get, if you want to go down to the 5 minute and wait for a reversal, you can. Because your 15-minute entry was here at this 21.15, right? So if we were to reverse on the next candle, that would be bad. You would have to get out. And you're basically getting out at break even if you did not take profit. I'd really like to see them get up there, but we are at new high of day exhaustion risk, but we have full time frame continuity on our side, and we know what reversals look like. So what we know to be true right now is the 15-minute is still in force. The 5-minute is trying to continue to the upside. What's ES doing? Being a little brat. Okay, so ES also triggered its 15. So its target, new high of day. This is still stuck. The only time you'll ever see me draw like wedges is it's just a higher time frame inside bar. And that's why wedges work, because you're trading a 2-1-2. It's on the 60-minute though. So your reversal would be there, but you can go down to the smaller time frames. So here you go. You've got a domino set up here. So you've got your 60 here, your 15, come on, mouse. Your 15-minute trigger right there, which just triggered. So this is, sorry, that says 60, but it's supposed to be 15. So this is what we call a domino setup. So you have your 60-minute inside bar. So you're looking for a 2-1-2 reversal. Then you go down the smaller time frames and you can find an inside bar reversal that can trigger the 60 and then make a new high of day, right? And you've got all four futures simultaneous 15-minute 2 ups. So this is a good thing. I could be trading, but it's really hard to teach and trade. But hey, I mean, we laid this out, right? So take it how you will. And you guys are all new to the strat, so I want to make sure everybody understands what I'm talking about. All right, Smiling Buddha, we're going to have a talk in the Discord. You're trying to fade things, and that's not what we do. Not when we have full time frame continuity. Oh, sorry. He said my name's Kane. I keep thinking you're talking to me while I watch ladders. Ooh, we got 100 more likes. Thank you to the 100 not lazy people. Oh, preach the word of God ministries. This is my first day with you. You are amazing. Oh, thank you. You are too. NQ. So EJ. Hi, Sarah. Wouldn't 20,536 be the magnitude target for NQ weekly up? The target on the week? What'd you say? Yeah, that's the target. Yeah. 2536. Yes, sir. Or ma'am. Sorry. I hate when people do that. What'd you say? What'd he say? We hit 20,200. I'll give 3K hits. What's a hit? Thanks, Bradley. The strat is just awesome. You can't, it just is what it is, right? Like, it's so cool because, like, it really is so cool. Like, in the chat room during the day, we're just like 15-minute 2 up. SPY. Everybody knows exactly what to do. The indicator. If you want the indicator for NinjaTrader, Somebody's going to have to link it for me because I don't have it saved. You can get more Strat info on my YouTube channel. Can you please show where the 2199.50 line comes from? Yes, it comes from the daily chart. It's this candle's high, which is 327. But it's kind of looking like we're getting a 5. Okay, so we got a 5-minute reversal. So, sorry, I was reading the chat. So if you were in from the 15, you would want to, if you hadn't taken profit at new high of day, you would want to exit on a reversal, which we just talked about right here. I said if we go 2 up, 2 down, that's where you'd have to, get out. But this would have still been nice and profitable for you. So if you entered on the 15, that was 29.25 points on NQ. And you'll see the 5-minute shooter hit its target, right? 2 up, 2 down, that's the target. You guys gotta get in on the strat. Patch. I'm exhausted after pressing that like button. Oh, come on. Thank you guys. We got 50 more. Mark, what do you mean by full time frame continuity? I mean having 4 different time frames, all the same color in like sequence. So like we just looked at, like ES, the month is green, the week is green, the day is green, the 60 is green. That is full time frame continuity. Do you want to be a bear in that? Only if you like losing money. So you want to look for long signals. And maybe we will get a 5-minute back up. But if you're trading futures, which most of you are, because we're on the NinjaTrader live, you don't want to sit through this corrective activity. You don't want to lose 28 points, right? So you want to exit your long and then wait. You could even short it because we knew we were at new high of day exhaustion risk, right? So in those instances, when we're at exhaustion risk, that's the only time you want to counter trend trade. Because you can expect, again, like we were talking about this morning, you can expect profit taking to happen at your targets because that's where correctly you really should be taking profit. So that's why you see stuff like this. Austin, hate when people do that, like adding an H to Sara. Yeah, that drives me nuts. Well, we're going to see if we can get up there first. And then, yeah, I would expect profit taking at 22. Oh, 3,000 likes. Okay, so thank you, NinjaTrader people. They posted the link if you want the Strat. If you want the Strat indicator, which you really don't need, because again, it's only 4 candle types. And I honestly, if you're just learning the Strat, I only put it on there for you guys because I obviously know them. But if you're learning the Strat, the best thing you can do is just go in your charts yourself and identify what each candle is and try to do it without help. Because indicators can be wrong. I'm not saying that the NinjaTrader indicator is wrong because it's not. Okay, you got an ES 5-minute hammer trying to go take out new high of day. But just go through inside, 2 up, 2 up, 2 up, 2 up, inside, 2 up, 2, 2, 2. I'm trying to find a 3. Here's a 3, 3, 2 down, 2 up, 2 down, 2 down, 2 up, 2 up, 2 up, 2 up, 2 up. This is a 2 down, but it's a failed 2 down, and it's a hammer. So if you were to take this long above the hammer, targeting high of day, this is a momentum hammer. They took it down, sellers went nowhere, take it back up, new high of day. That's not much. It's like 4 points. And ES, again, does not really have a target beyond new high of day, other than that daily wick. What's NQ doing? Probably also hammering up. So this is another entry. 2 down, 2 up on the 5. Okay, so it just triggered. They both just triggered. They all 4 just triggered. You have a simultaneous 5-minute break right now. Those are powerful. Hammer. Momentum hammer. 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 We all get at our charts. We encourage them. Right now, what are all red? I don't see anything red. Broski? Anybody can learn the strat. It's free. ES, new high of day. Like it was supposed to. NQ working on it. RTY, new high of day. YM working on a new high of day. Give us that 22. If you want the strat sheet, just go to my Twitter. It's in my pinned tweet. Or join our Discord, which is also in my bio. No longer continuity. You can go to my YouTube channel, which is Sara Strat Sniper. I have a playlist called Strat-ucation, like stratification, like education. Strat education. AV, having a blast scalping this market. Sweet deal. Yeah, I mean, there's plenty to do. Yes, so seriously, anybody trying to short this market right now, not having a fun time. You don't short full time frame continuity. And if you see here, we made a lower low, right, on that 5-minute chart. Failing to hold below the low. So I'm gonna draw my little box again, okay? High, low, right? Get up there, boy. So failure, guys, I've done this on every time frame. It's all the same stuff. Failure to hold below means we're going where? We're going up here. It's very simple. I promise it is. You just have to get good at learning your ranges. So here, see how powerful the 5-minute simultaneous break is when everything's doing the same thing at the same time. Lovely, lovely. YM close to making a new high of day. I really would like to see NQ hit 22 before the stream ends. But if not, okay, so again, if you were scalping, boom, 26 points. And let's see, on the 1 minute, you can still be holding. Because the 1 minute hasn't reversed. Right? So if you took the 5-minute trigger, you can trail on the 1 minute. Well, I suggest, well, I don't suggest anything. I'm not a financial advisor. But I would take profit at a new high of day And then if I had a position left, I would just trail it on the oneers. So my stop is slightly above, like on the running position, slightly above. Okay, so you would have just gotten takeout. But you see what happens? Anytime you make a new high, that is where people take profit. That's where you're supposed to take profit. And that's what's happening. Ah, no. No, no. Bad girl. We do not want to leave the site. Okay. New high of day exhaustion risk, and we have a broadening formation. Do they come all the way back down and take these guys out? And we've got a pivot machine gun, so it is possible. But this is how you scalp the... I almost said a bad word. This is how you scalp the SHID, out of the futures. I would kind of love it if they went all the way back down right now, just to prove the broadening formation point. We do not have a Strat bot anymore. That shouldn't be on the page. So with futures, we use what is it called? Extended trading hours. So all of the data. Which Twitter handle is actually me? I've got almost 80,000 followers, and it's at Trade Sniper Sara, so that one. I've been diligently working to kill I always have, to kill my impersonators. Yes, it's Trade Sniper Sara. Oh, nice. Footprint guy says, I have my own strat that works, just taken off 8 from 56.88. Nice. What I'm not good at is targets. Today you made it such a difference to my take profit. 2 positions remaining as of 5704. Nice. Strat is cooking right now. It's always cooking, baby. Guys, you can find everything by going to my Twitter. I've got a link tree. Just go to my Twitter. Everything that you could possibly need is there. Good. Took profits on the Warner reversal. Nice. And then what's happening? Inside... So I don't want to delete my drawing. I'm going to delete it for a second, but inside oneer and down. Again, they're trying to go after those lows now. Which would be an outside 15-minute candle, which is also how broadening formations happen. Awesome. And again, you got to be nimble. So I know I have this 22 target up here, but when we make that new high of day, again, potential exhaustion. You want to take profit, and then like we were just talking about back here, trail on the oneers, because if you're trading futures, which most of you are, you want to trail tight, right? You could also trail using the 5-minute chart if you're using like the micros. Okay, I got to get rid of this now. I can't see my candles anymore. So see, it went, okay, so we went outside on the 5-minute. So that 1-minute reversal went outside bar. So again, if you just want to be an outside bar trader, you can just be an outside bar trader. That's the range. So short here, target here. How many points is that? 36 on using a 5-minute candle. Like, there's so many ways to be a strat trader. It's really cool. Oh. All right, so we've got a 3. Preferably you stay inside on this candle. 1, because I hate 3-2 candles. I just don't love them. I traded it on the weekly because I knew we could potentially trigger the monthly. So I have to have multiple reasons why I'm trading a 3-2. So whether it's exhaustion risk, it can trigger a higher time frame setup. Like, I have to have multiple reasons. I will not just take a 3-2. Look at little RTY up there. So strong. Ooh. Can't help you with order flow. Never used it. What's Tesla doing? I didn't look at stocks today. All right. Everybody's yelling Tesla. Did it go outside day? Basically, yeah. So let's look at Tesla. I'm going to draw this again. It's literally the same stuff, but here's yesterday's range, right? No, sorry, my bad. That's the 2 hour. Why is everybody yelling at Tesla? It's an inside day. To go trade something else. This is not, no, we're not looking at Tesla. It's an inside day. Who cares? There's nothing to do here. If it would have triggered the day down, just like it did the day before, and we shorted this on, I think that was Tuesday. Trigger to go short. So we opened here, triggered the day down, boom, target hit, boom, we got a reversal. Play the other way. So tomorrow, or whatever day, Monday, if you get a shooter in force, then you can short it. Today is an inside day. You're not supposed to be even looking at Tesla today. Bad stratters. Okay, see what's happening? New high of day exhaustion risk on ES. Potentially, they can come all the way back through now. Right? But you must trigger a reversal, which we have not. So this would be the 15-minute trigger. Which is the same as the 10. Sometimes it is, sometimes it isn't. New high of day exhaustion risk, flip. Got 6 minutes left on this candle. It's potentially going outside 15er, right? Because we took out the highs by 2 ticks, and fell back in. So again, with the range, I'm not going to draw it again. It's kind of a lot of work. NQ is still an inside 5-minute. RTY is trying to take the momentum hammer up. YM also with a momentum hammer, trying to take out new high of day. Oh, we still want it to stay inside. Okay, so it stayed inside. Now we want it to go 312 up and go take out that target. That's what I said. I said I wanted it to stay inside because it's a 3, 1. Now we want the 2 up. Give us that target, please, within, preferably in the next 5 minutes. All right. Got to stay above that inside bar. Okay, they all seem to be failing. So you would, if your stops are super tight, you'd want to get out when it went below that trigger. Or if your stops are larger, it would be down here. So we got, let's see if we get, no. We're going to give it the whole 5-minute candle, see what happens. Kind of looks like they're trying to go outside 5-minute though, by taking the 1er down. Yeah. So that failed, and it failed fast. So if you took, again, you can take a 5-minute trigger and you can exit on a 1er against. Like there's so many ways to strat. It's crazy. It looks like they are, after all, trying to finish this guy. You remember that from just a couple minutes ago? You'd prefer that ES stays inside because we have a new 15-minute candle starting in 2.5 minutes. So again, when things occur matter. So this is a 15-minute chart. So we want a 15-minute setup lasts 15 minutes. So you don't want it to trigger with only 2 minutes to do something, right? Because you've lost out on 13 minutes of time. So when things occur matter. So that's why, again, with the 5er, I said we would prefer it stay inside. And then we'd prefer this 15-minute stay inside. And if it does, that is a 2-1-2 reversal at new high of day exhaustion risk. And they'd look to go and take these guys out. What's Bitcoin doing? Nope, wrong button. Bitcoin went inside and up on the 12-hour. Bitcoin's still good. Bitcoin's going to be making a new all-time high soon. Still good from this weekly reversal at 86,093. The 2-week chart is really clean. Here, let me remove my doodle. I like to doodle. I like to draw finger doodles. And it just helps people see the broadening formations better. So this was the weekly entry. And you can use a 2-week chart. It's all fractal. It's all the same stuff. And this is what we call a rev strat, right here triggering. So you have an inside bar, a 2 down, takes out magnitude. Is this exhaustion risk? It is. Do we stay below it? We do not. So if this is your range and you fail to stay below it, where is it trying to go? It's trying to go back up here. So this rev strat hammer in force is still good. And Bitcoin just triggered its monthly. Nope, that's an old monthly line. My bad. Oh, no, this is a trigger. This is a 3-2 2, continuation, just like SPY weekly this week. Okay, that's wrong. 3, 2. SPY is very close to triggering its month, and my IRAs are going to be very happy. Okay, here we go. The inside 15ers and down triggered. So far, green right away. That's not what you want to see on a 15-minute signal. You want it to go right away. It's the 60s, green, 30s, red, 15. Starting to get ooh. Yes, you can use the Strat on the VIX. Anything. This is getting kind of, looks like potential out. Oh, NQ didn't trigger. Looks like potential outside 15ers. For ES. Ugh. I wish they would have taken out this low. At least done that. Because that would have been a Browning formation low. So if they would have done this, would have been cooler. To stop people out and then go. That's what we're always looking to do. We're looking to stop traders out and then reverse. So where are your stop hunt people? Yes, I stream here every Friday. And SPY, again, is trying to trigger the month. This is the weekly chart, but this is where we entered or added. Some of us entered down. I didn't. I missed it, but that's fine. Some of us entered on a 2-2 reversal on a Tuesday, which I can... right here. It's very easy to see right there. And that was our outside week. So if this was 1 week, if that was your inside week, these bars are an outside bar of that. And that's why turnaround Tuesday is so important to us. Because one, it can negate a higher time frame trigger and it can change continuity. Time frame continuity, which it did. Because on Monday, this was Monday, the weekly candle was red. On Tuesday, all that turned around. So then we had weekly down full time frame continuity to go outside week, which we did. So yeah, let's trigger those months, buddy. It's getting a little grindy now. Kind of just like 25 minutes kind of stuck inside this leg. NQ is trying to give you a fiver back up. Oh, that would be so cool if we do hit this target before I get off, but might not. So this would be the trigger. Target 1 would be a new high of day. Target 2, that daily target. It's just getting slow. You ever just feel like a Trump tweet's going to come out? I don't know why I just felt like that. Just like at the perfect time. I think that's why. Because it's always timed. I am not going to Miami to meet up with Kane. No. I did get the invite. I said, no, thank you. I've actually never been to Miami. I'm not in my 20s. I don't think I should go to Miami. I don't know. I guess I should see it once. It's not really on my bucket list of places though. I want to go to Italy because I am Italian. Meta triggered the month up, said someone. Let's look. Yep. Actually, it did yesterday. I think. Yeah, it triggered yesterday. So, Meta. Same thing as everything we've been talking about with the futures this morning. Got to stay above April's high. That means it's in force. So your magnitude is this range. Gosh, these letters are so, or numbers are so tiny. So the trigger is 592. And the target is 681. And target 2 is a new all-time high. So if we measure it, that's a 15% move, and that's a 25% move. Oh, nope, they triggered. So the inside 5 and down, which triggered the 15 to come back through the broadening formation on NQ. It's just kind of boring now, though. Got 6 minutes left on these 15-minute candles, and they are not staying down. Reversal right back up. Yeah, on a higher time frame, we are an inside bar. That's why it's getting grindy. Because you got this swing low, that swing high, and you'll notice we're stuck in there. So it's probably an inside 30-minute candle, if I had to guess without looking. That might be, it's technically a 2 up, but it's inside. We're stuck in that range. You can see it on the one. Okay, so in 4 minutes, you got another 15-minute flip, and the downside failed. So you've got a 15-minute trigger. And for NQ, again, still that target. So now this candle has to close, and then you have to trigger it on the next one. Like that. You would want to see just... Do, 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 do. I do not watch order flow. We do not, we're nowhere near a reversal back down for a while. It's not happening. The only way, and I don't think, unless some crazy news happens over the weekend, which I mean, that could totally happen. We can't reverse unless we take the previous day's low. So there's no way we're reversing anytime soon. Because look how high we are up on this daily candle. You'd have to break Friday's low on Monday to get a reversal. And I mean, again, like barring any crazy news, I don't see it happening. We're more likely to go 3-2 up. And then if you're looking at the weekly chart, you're nowhere near reversing that. You'd have to break this week's lows next week. So we are much closer to continuing to the upside. So that's what I keep saying. Like bears, if anybody's trying to short this, there's just nowhere, we're not anywhere near reversing. So there's no reason to have any kind of short bias right now. Look at these. Look at all this green. Green, 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 green. This is full time frame continuity. This is new months. So we were red last month, green this month, trying to trigger the hammers up to hit new all-time highs. So we're nowhere near reversing. Until you break a previous day's low and you can change something on the weekly time frame, it's just not happening. For a pullback trade on an intraday time frame, you need at least the 60-minute. And we're nowhere near a 60-minute reversal. Oh, hello, Jim.
I sneak up on people in these segments.
You did.
I'm going to give you a shout out, though, for Miami. It's not just a young person's place. It's a wonderful place. It helps going with an insider. Maybe you get shy to go with you, but it's a cool place. Very, very, a lot of fun.
Really? I don't know. I just have, I guess, a certain stigma about it. Like, I don't know. I'll probably check it out, though.
It's worth it. Where are we out on your charts?
We're just continuing up. I mean, every reason to be bullish. Oh, I think the 15. Nope. So guys, pay attention you got a flip in 15 seconds. They're trying to still NQ hit that 22.
Nice.
Yeah, we're like bullish for the, foreseeable future. Everything's super green. We're not turning anything around. We just triggered monthly hammers. So if we can stay above April's highs, new all-time highs should be coming in the next, I would say, like by the end of June would be probably the latest I would expect.
Wow. All right. Well, that's good news for a lot of people.
Yeah, for those 401ks, buddies.
I'm going to need mine pretty soon. But in any event, Sarah, that it was great. It was great seeing you on a Friday. Appreciate you did a great job today as usual, explaining everything you're doing. Really, really awesome seeing you. You will be back next Friday. Is that correct?
That is correct.
All right, all right. Well, I'm going to miss you next Friday. I
Cool.
will not be here, but I will be here the week after, and I'm sure it's going to be an awesome session with you. In the meantime, have a great weekend and a great week, and I will talk to you soon.
Yeah. All right. Thank you. Enjoy your family time.
Thanks, Sarah. All right, that was great, everybody. We're going to roll right into our new segment for a Friday. This is basically a weekly wrap. We call it weekly wrap. And luckily for me, I am joined by Shy Girl on this Friday. Hi.
Hey there. It is Friday, so I'm getting excited.
Yeah, but let me ask you about Miami though, real quickly. You lived there for a while. Is that right?
Just north of Miami, yeah.
Okay. All right. That's a great area. Hollywood and West Palm and all that
It,
stuff. So much to do.
yeah, absolutely. But I'm here now.
All right, all right. I'm going to come down and visit. So, anyway, for the weekly wrap up, let's talk about some of the big movers this week and maybe some surprises. Let's start with crude oil, because crude oil really, really kind of surprised me.
Crude oil had a crazy, crazy volatile week this week. We prices dipped to 57 a barrel kind of midweek and then recovered slightly. Overall, it was down over 6% on the week so far. We don't know how this closes yet, but assuming it closes here, we had market obviously was sentiment was pressured by slowing demand, and then the expectations that OPEC is going to raise prices. And I can hear you clicking. Turn your mic off. Was going to raise prices. Sorry about that. Just talking to Sarah real quick. Was going to raise production in May, and then we had that crazy rumor that came out that said they were going to forego all that and they were going to turn on the taps, and they didn't really care if prices were lower for longer. Then we found out that wasn't true, and then so we did find a bounce in the market, and then of course that we kind of continued higher yesterday after talks fell apart with Iran, and Trump tweeted out that secondary sanctions would be placed on anybody who purchased crude oil or any petro products from that country. I will say that China is their biggest customer and does not really care what the U.S. says, but other countries it may matter to.
Yeah, I mean, what a week. I have pivoted to a weekly chart for this end of week wrap up, which makes sense because it's the end of the week. And I have just a simple candle chart up on the screen. At the bottom, I do have commitment of traders data down at the bottom here. It's native to the platform. You saw Jason Shapiro talk about it earlier today. So those are always on my weekly charts here as well. So if I see something interesting, I'll shout it out. Remember that commitment of trader data is going to come out this afternoon. So we'll get a new histogram bar at the bottom. But from a technical analysis, I mean, year to date, we're down 21.37%, give or take, in the crude market. That's year to date. We had a really nice area support for a long period of time. I mean, this thing started in August of 2024, and it just really framed the bottom of the conversation forever around 66 bucks. And then, yeah, a couple of probes, a couple of wicks into that rectangle, and then boom, we have a giant breakthrough on the downside, and now continuation selling as well with a target wick all the way down at 55.17. So this is continues kind of from a weekly point of view, looking a little bit bearish. From a daily chart, we're going to zoom in a little bit more on a daily. We have a double bottom brewing, and I'm recalcitrant. I don't have my rectangle in there yet. What am I thinking? I'm going to put it in there right there. That's support right now, and that's kind of moved down from that 66 level down to that 58 level, 58 handle. Yeah, a couple buyers wicks came up there as well. The stochastics are looking ugly. I mean, a cross under happened a couple days ago, 3 or 4 days ago, and then it's continuing. It's just touching that oversold area, but even if it penetrates into it, it could stay oversold, quote unquote oversold, for a long period of time. So this was kind of a really nice retracement too, because we sold off high to low. We retraced back up. We hit that 50% retracement textbook boom, and that became resistance. And then we just sold off it again. All the moving averages are arcing downward pretty forcefully. So that's the story of crude oil. We also have a big story in gold, I think, this week.
Right. So we are down. Gold prices declined approximately 2.7% for the week. And though that's not the largest move it's ever made, it's one of the steepest weekly losses that we have had in this market. Obviously, kind of, we had this risk on sentiment, so risk off. And then we also saw some strength in the dollar. And so this market has pulled back a little bit this week, but it was in very overbought conditions. I think everybody was kind of expecting this market to pull back a little bit. We did consolidate for a few days, and then finally let go. So we are bouncing a little bit today.
So Tracy, let me ask you: is there any like central bank chatter going on that's different than what we've been hearing?
No, not really. I mean, we talked to Leland Miller and Leonid this week about China and China's central banks and about China, gold buying. And really what they said is we're just starting to see, retail in Asia and China in particular start to get on this trade. And of course, central banks will be buying on major dips.
Yeah, that makes sense. The weekly chart is, I drew a, kind of a loosely fitting trend channel starting from the week of March 7th. Remember, this is a weekly, kind of nice orderly rally up. We kind of stalled out at the top here. We have a really nice seller's wick a couple weeks last week, which kind of is like, all right, that's enough. We're going to slow our roll for a little bit. But we didn't have a really big retracement down on a weekly, nothing to be worried about. And by the way, these are 50 and 200 simple moving averages on my weekly chart. We also we're up 22.75% year to date on gold. And I'm trying, it's a moving target a little bit because we're moving today, but that's a pretty good move up on gold just for a few months. At the bottom, the commitment of traders are kind of getting tighter if you use your imagination for the last 3 weeks, both the net longs on the large specs and the net shorts on the commercial, but no major dislocation there. Moving into the daily. Daily, we have again, we're at an interesting spot on the daily. We had a turnaround candle for sure. I have that ellipse around it. Let me open this up a little bit more. And then we had consolidation for 6 days, right between pretty much, well, I'm just going to say 32.90 in the top part, about 33.70. Broke on through to the downside, but now we're trying to fight our way back up. We're trying to get back into my little rectangle here. So this is like a mini burger. This is a small burger. We're trying to get back in there, and we might because that 50% kind of held right now. So right above that 21 EMA, in between the 80 EMA, as Bobby Iacchino would say, in that rotation zone. We have the stochastic still sloping down, still not oversold completely yet. And then the very bottom, I do have a volume bar. So today we'll see what kind of volume we end up with. It's pretty much average volume this week, I would say, all in all. So that's kind of the picture in gold right now. Silver, though, is a little bit of a different story. What's going on in silver?
So silver was kind of mixed this mixed this week, right? We had underlying support from factors like industrial demand, and the positive year-on-year kind of to-date trend remains the same. But short-term reaction was influenced by, obviously, the U.S. dollar. We also had a little bit of concern on the industrial side from sectors like solar energy, because China is such a big producer, and the U.S. is their largest customer. And so there's a little bit of concern on that. And really, those were kind of the major drivers. Again, this market is sensitive to U.S. dollar as well as gold.
Yeah, so let me ask you this question, because it's a lot of the silver industrial applications are for things like solar panels, batteries, I'm sorry, circuit boards and mirrors, stuff like that. But on the EV side and on the solar side, is there going to be less demand in silver if the whole world decides not to go so gung ho on electric, or is it happening anyway?
Well, I think it's happening. We're kind of seeing this bifurcation happen where we're seeing this sort of change in the West, Europe and the US markets, but we're seeing stronger demand in Asia. So the world's kind of bifurcating that way as far as EV demand is. Obviously, half the world's population is in Asia. And so there's still a lot of demand on the other side of the world.
Got it. Well, we're both gas guzzlers, so we don't care. Let's go to the weekly chart. We have kind of so it's an interesting candle here. The last candle, this weekly candle here, the body of the candle is technically a bearish engulfing, but I view this more as an equal and opposite candle. Like we just wiped out all the gains we had last week right now. And the wicks on the bottom and the top they're proportionate. They're decent size right now. So this kind of retracement back so far is in my case not too worrisome. We're pretty close to the midpoint though of this benchmark candle, this really big candle we had on the week of March 28th. So hopefully we'll close above it and continue our rally back up. Year to date, we're up 7.52%, give or take, in the futures. In the silver market, not quite as robust as gold, but still pretty good movement. My 50 EMA is kind of in play right now. That's that red line right there, but we still have a lot of price distance between it. And then the daily chart, I did a closer fib. So I went from this low, crazy wick down here we saw on April 7th up to the recent highs, drew a fib line there. We're right at that 23.6% retracement. Not a major one in my mind, but we're definitely seeing a little bit of a stall maybe. But the ADMA is about to cross under the 21 and maybe even cross below the 21 and even maybe below the 50. And my rectangle, I'm going to move this over a little bit further here. So this is kind of where I'm gonna consider support in this market, 32 spot 13.5. Now the ugly news here is that stochastics is just kind of crossing down negatively, like violently. This is a violent cross under on the stochastics, so that's also bearish. But right now, again, the support area is going to be important. Again, approximately $32 to $32.20, that kind of area right there. So that's what we're seeing in silver. Let's shoot over to Mr. Yen, because Mr. Yen is also in play.
Yep, we had yen down 1.2% this week. We had Bank of Japan maintained its benchmark interest rates at 0.5% and downgraded its growth and inflation forecast. This dovish outlook kind of diminished expectations for any near rate term hike, kind of contributing to that yen weakness. Obviously, we also saw strength in the dollar, on renewed optimism of trade deals that we keep hearing about that haven't come to fruition yet, but we keep hearing about them. They're happening. Just wait. And then kind of market sentiment on the U.S. in general, in the equities markets, and some of the, and a little bit of a investor confidence showing through in the risk markets, and so again, contributing to weakness in the yen as well.
Tracy, it seems like interest rates set by the Bank of Japan have been like negative or zero forever. I mean, are they ever going to be able to get out of that?
No, I I don't. I honestly, I don't think so. And I think it would really disrupt markets if everybody's kind of cutting and they were to raise rates substantially. But I think they're pretty much stuck right now, right? I mean, they own all their bonds.
Got it. That makes sense. All right, let's take a look at the weekly chart here. The weekly chart, we have a loosely fitting trend channel up. We're up about 9.18% year to date so far, which means, remember, the dollar's in the denominator here. So yen is up, dollar's down. That's that relationship. If you're trading over the counter Forex, you might be doing USD versus the yen. But the over the counter Forex people can't deal with decimal points. That's why the futures traders are smarter. But in any event, we do have movement on the commitment of traders, right? We do have. You can see these
Dad.
kind of these. Sorry, that was my plug for futures trading. Let's do it. The large specs are increasing their longs, their net longs. The commercials are increasing their net shorts. So we'll see if that reverses when we get data Friday, or if it continues when we get data later on this afternoon. From a overall retracement point of view, nothing to write home about. No major retracement in sight on the weeklies. On the dailies, though, it's kind of an interesting formation because right now we have a pretty decent sized red candle yesterday, a big sell off. We broke below my anchored VWAP. I have that VWAP anchored from March 28th, the lows on March 28th forward. And we closed substantially below it. Now we're substantially above it. It's still kind of an inside bar if you just blow off the wicks. But someone might even say it's a key reversal. I can't remember what the definition is or not, but it's pretty decent sized green candle back up. We're above that piercing line. We're right at that 21 EMA, just short of that 8 EMA as well. And then again, we never closed below the 61.8% retracement. So in my mind, I'm still bullish the Japanese yen, and I have my eye on the stochastic. So we'll see if we get past that 20 level on the downside at some point today. So Tracy, those are the major commodities. Let's spend some time on the equity markets. I mean, everyone's talking about the E-mini S&P and the micro NASDAQ. Let's check those guys out.
Yeah, obviously, this week, all the major indices, even the Dow that everybody hates, posted substantial gains. We had some better than expected corporate earnings, particularly in the technology sector, and some encouraging economic data culminating in today's jobs report, which was better than expected, even though we still have ongoing concerns surrounding U.S. trade relations and their potential impacts via tariff. So far, it looks like sentiment has remained largely optimistic, and we've seen these benchmarks higher this week. So we've got NASDAQ up 6.7 on the week. We have so far, the market hasn't closed, but S&P up 4.6% and the Dow up 2.5%.
Yeah, I was talking to Pax this morning, and if to me it almost feels like now everything's back in play because before everything was overshadowed by the tariff situation. Now it seems like the tariff situation is still important, but so are earnings and so are the economic data again that we're used to, like today's data, non-farm payrolls and stuff. It almost seems like the three pillars are back in determining price movement. What do you think about that?
Well, yeah. I mean, today actually, good news was good news for the markets. Instead of looking for cuts, they reacted probably like they normally should have, but the market's been so focused, I think, on these rate cuts that anytime we've had good news, the markets have reacted negatively to that. But we're kind of back to good news is actually good news. So
Yeah, I look at that Fed funds tool like every 10 minutes. I probably shouldn't, but now it's like the odds of the next rate cut being over 50% or being teal, I should say, are July 30th. So the June meeting, now it's looking like maybe there's not even a rate cut in the June meeting. That kind of surprised me today.
absolutely, absolutely.
Yeah. In any event, we're still tracking up to 4, though, between now and December. The weekly chart here is, this is a great chart. There's a lot of stuff going on. And really what shocked me was I tried to figure out where we started the calendar year at and so approximately where we're at right now. We're only down 4.92% year to date. I know we should never be down, right? No one wants to see that, but there's so much doom and gloom out there up until today anyway. It's not that big of a drawdown overall. We've recovered an awful lot from these lows that we saw in the week of April 4th. We never closed below the 61.8. We wicked through it a little bit, causing a little bit of a worry. We kind of rallied all the way back up now. I have a long-term VWAP. That's from October 2024. We're trading above it again today at that 23.6 retracement. So we'll see. I would like to see another weekly close a little bit higher, and then I'd feel a lot more comfortable. And then again, we're going to get that commitment to trader data coming in later on today to see if the commercials are increasing their net longs anymore or not, and then if the large specs are increasing their net shorts anymore. On the daily chart, a little trend line kind of forming, moving up here a little bit. We have crossover from the 8 over the 21, which I thought was significant. We broke on through a long-term area of resistance, which is now support in my mind. And now we're trading, again, I have this VWAP. I believe the VWAP is from the highs in February. Yeah, February 19th highs, anchor VWAP. Now we're trading above it. And for really almost this is the first day really where we're going to close above it, but we're going to close strongly above it and above the 50 EMA as well. And the retracement, we close above that 61.8% again and again, a couple more times. And then I'm going to say the trend's reversed. We're back in bull mode. Now, of course, anything could happen with the news cycle, as we've seen time and time again. The stochastics, they're pinching, they're touching, they're flirting right now. 93.17, still overbought a little bit, but again, it could stay in an overbought situation for a long period of time. The other thing that's really interesting, if you go to the bottom panel of my chart here, volume has been kind of, I hate to use the word normal, but at the same level it was before all the crazy excitement happened with tariffs and stuff, and you could kind of see my line in the sand there at about 1.8 million, and even today might even be a lower volume day at this pace. I mean, we're pacing at 600,000 so far. Maybe we'll end up with 1 million depending on what happens on the close. So low volume day on a Friday, but it's Friday, so I'm not surprised at that. And Shai, I wanted to ask you also before we go to bonds and no. Well, let me ask you this. I'm going to just pull up a correlation chart. This is a. I know it's crazy. It looks like a bowl of spaghetti, but this is a correlation between the E-mini S&P and the 30-year Treasury bonds. And a couple of days ago, we were tracking almost like a perfectly correlated market, and now we're seeing this big kind of reversal here. This is the top line is the 8 period look back for my correlation, and it went from a plus 90% state to 42.5%. So it's almost looking like this relationship's going back to how it's supposed to be, inverse.
Perhaps, or one of them's wrong. But again, we talked a little bit about markets seem to be normalizing a little bit. and how they are reacting to things. And so, perhaps that inverse correlation does come back, or one of them's wrong. Let's put it that way. But now that you brought up bonds, which is interesting, and I'll let you go through, the bond chart. But what was interesting, I thought this week there was an options trader for the 10-year Treasury note. The bet is that the yield is going to rise to 4.45% on the 10-year for May 9th expiry. That would mean bonds definitely are not done to the downside, but who knows if that happens or not. But, it was 20,000 options on this. So,
Did you what was that yield number? I didn't catch that.
4.45%.
Okay, I mean,
Quite
I
a
think
spike higher.
yeah, no, I could see that. I mean, right now and again, I'm going to quote the CME Group's micro yield contract. So it's going to be different than the cash yield a little bit, so don't freak out. But right now we're tracking 4.311 for that, and that's up 1.91% on the session. The 10. Let's start with the 10-year weekly. We had a benchmark candle here. This is that crazy week on April 4th. We never really closed below the midpoint or the piercing line of that candle. We got up there, we got to that 38.1%, but we didn't close above it. And now we're kind of selling off against it. So that's a little less bullish than I thought I should be from a big picture point of view. So maybe that bet might be spot on. Who knows? If we can get some action in the right direction here. Commitment of traders, again, we're going to wait for this afternoon before we kind of dig down into that. The really tight kind of consolidation range, we're back into it. We're back into my consolidation range. Again, this is the second time we tried to peek out. We only had 2 closes above it, and then the second close was a doji. And then yesterday, boom, sold off. Today, sold off, breaking back down again to that 80 EMA, that 21 EMA, that 38.1% retracement, and the stochastics look like they're going to start crossing under. So this is looking a little bearish to me, at least short term right now. And going back to my first chart, maybe the correlations are becoming normal, and maybe Pax is right. We're going to make some and Sarah's right. We're going to make some all-time highs coming up pretty soon, which means this might kind of break down a little bit further as well. And while we're looking at it, Tracy, let's just go to the long end of the bond, the risk on, risk off 30-year Treasury bonds. Anything notable about the 30-year?
So obviously that's pulling back, and business intelligence came out, or Bloomberg Intelligence came out this week, and they believe, or most analysts that contribute to that, believe that the yield curve will continue to steepen.
All right. There you have it. 30-year on well, I didn't even show a weekly. Real quick. We're running behind schedule, but this is our first one of these, so we could go a little overboard. Similar to the 10-year, but a little different. You get more extreme moves in this particular market. My old support, I had a pretty keen support here at 16 spot 21 or 16 and 21 30 seconds. And I drew that rectangle across here, and right now that's acting as resistance. And yeah, we have a big wick on the upside here. Sellers came in, took over, brought us back down considerably. And on the COT, the commitment of traders data, the large specs are very, very negative, whereas the commercials are kind of slightly positive, net positive position. So again, we'll see if that changes in a second. And on a daily, again, we're just wrapping down. That 80 EMA is crossing under that 21 again. Stochastics are about to cross under again. My target here on the downside now, if this continues, is that 23.6% or a 114 handle, 114, a little bit over that in that market. So that's pretty much the weekly recap, but we have a lot of stuff going on next week, I think.
Just a little bit. We have obviously FOMC. So we will be starting early that day. So will join us at 1:55. And we will be you and I will be talking to Tony Nash again. So that should be fun. So we have FOMC obviously on Wednesday. We've got PMI and ISM services on Monday. Tuesday we have trade balance. So no real crazy data on that ahead of the big data day on Wednesday. And then we have obviously initial jobless claims and continuing claims on Thursday and wholesale trade. And that would do it. Nothing on Friday. So the big event is Wednesday.
Yeah, no, I know it's going to be a big week, and we have some new guests too. I wanted to ask you about because I know I thought I saw on Monday Ross Kennedy maybe is joining us on Monday. Is that correct?
Yes, that was actually somebody in our chat, or a couple of people actually in our chat asked for him. So we are going to talk about what's really happening in logistics. What does this mean for the economy, and thus what does it mean for risk assets in general in the U.S. So we're going to tie that all in, and he works with the government, so he's got the inside scoop. So we'll find out what's really going on.
Awesome. And then I saw Damon Pavlos on Tuesday. I haven't seen Damon in a decade or so. Is he Tuesday?
He is on Tuesday. Yes, actually, he was another suggestion from our chat, so we got him in.
Yeah, that's awesome. So he popped up recently
We're
on
going
my
to talk
Facebook.
trading.
I know, but he popped up recently on my personal family Facebook thread, and I was like, "What is he doing on there?" Because I kind of separated a little bit, and he so this girl I went to college with. All right, maybe I had a little crush on her, but don't tell Damon this. Is on my thing, and it turns out they're related. So that's why he popped up on my Facebook thing, and I thought, "Wow, I wonder what that guy's up to." We're gonna find out on Tuesday.
That is crazy.
Yeah. Let's finish out. We got Mike Green on Wednesday. Is
Yep,
that
Mike
right?
Green is
Yep.
amazing. Yep, he is portfolio manager at Simplify Asset Management. Great macro guy, and he knows really well kind of the inner workings of the index. And so we're going to kind of dig into that with him a little bit.
All right, awesome. And then I have actually Brannigan Barrett on Wednesday. Brannigan he's with Trade Low. He has opinions on FOMC, interest rates, and the whole thing. So he's a really bright guy too. So I have Brannigan as well. And then Thursday, last but not least on my list here is Amina Baker.
Amina Baker, she is amazing. She is an OPEC insider and excellent journalist. She's worked for Reuters. She's worked for Energy Intelligence. She now works for Kepler. So we're going to get the inside scoop on what is going on in the oil markets.
That's awesome, you guys. You guys hang out with Shy in the morning, and you're going to meet all sorts of superstars in this business. So appreciate you for getting those, and I'm looking forward to it.
Absolutely.
Anyway, thanks. I think our first weekly wrap up went excellent. Thank you for spending a couple extra minutes with me, and you have a great, fantastic weekend.
And you too. Have a great weekend, everybody.
All right. So we're Jeff Reckelmeyer. When are we going to have Blue Putnam on next? I'll get Blue on. Blue's a good friend of mine. I'll call him up. I'll get him on. The new show is like there's so many moving parts here, and I think we're getting in our groove right now. So I'll give Blue a call and say, hey, Jeff wants you on. Let's get on. We're going to spend the next 25 minutes or so. I'm going to talk a little bit about time and sales. We could look at some markets as well. And also, feel free to ask Jim anything. You could it's an Ask Jim Anything segment. I'm not going to have a guest today, but keep it PG-13-ish, right? Don't get too don't get too crazy. Oh man, thanks, Jeff. Appreciate you, man. let me pull this up. I'm going to just get into, we'll just pull up an E-mini S&P chart a little bit. Appreciate everybody sticking around. I know it's Friday. Everybody wants to come on Friday, including me. But let's pull up an E-mini S&P chart, and I'll just go to intraday chart, kind of see where we're at. And then I'm also going to pull up time and sales. So I'm going to pull up this control panel here. If you guys aren't using the desktop platform and you have the ability to, I recommend it. It's feature rich and it's got a lot of stuff going on. It looks a little old fashioned, but it is not. I'm just going to go ahead and click on that time and sales window. It'll pop it up. And of course, I don't have my colors up here yet. Let's get some instruments going here. Let's get E-mini S&P up. All right. So what this does is it shows you, these are trades coming in. These aren't bids or offers, right? These are I have this color coded. It's not the best color coding in the world. I just realized that. Apologies for everybody. But this is native to the desktop platform. And you could see whether, you could see the size of the contracts, the time they came in, and the price they came in. That's how I have my column set up, and you could kind of customize them however you want. Again, you right click in the properties section here, and it gives you some stuff you could do, right? And so, the filters are kind of important for me when I use this. Jeff picked out a big one, a 300 buy already. But you could actually kind of customize this a little bit more. And you could aggregate it by seconds, right? If you don't want to see everything streaming so fast, you could say, all right, just show me this data every 5 seconds or 10 seconds or whatever you want to do. Block alert trade size, you could set a block alert and it'll give you, you could even make a sound go off. If there's like, I just have 80 set there. You could set it to 100 or to whatever you want. And this is just kind of font stuff. You could put font stuff on here. You could add the bid ask spread if you like. I didn't do that because it's just too much. I just want to see the last price, and I'm showing quotes. Filter size, this is a good one. So I'm going to go ahead and change this to see how you see one lot's coming through, two lots coming through. Data is just coming into, there's too much of it, right? So I'm just going to change this. We'll just change it to 10, and I'll just hit apply. And we'll see what changes what change happens. Let me apply. There we go. Now, any trade less than a 10 lot is not going to show up. I'm not going to see 9 lots, 8 lots, 7 lots, all these 1 and 2 lots. I'm not going to see those anymore. I'm just going to see the big ones, right? So, again, you could personalize this to however you want. And that's there's a 12 lot right there, right? And it tells you if it's on the bid or if it's on the ask, and you can kind of get a sense of order flow through this mechanism. And it's not, this is kind of a big deal for a lot of order flow folks. I know that there's some software that kind of tries to consolidate this, but this NinjaTrader feature is really pretty good. I mean, it's really good at doing that. So again, I would recommend people take a peek at it if you're using the desktop. If you're not using the desktop, maybe consider it. Yeah, you can't use it on a Mac, I know, but that's it. Do we have earnings releases today? I don't. I think the major earnings have been released. I'll show you how I find this information out. Let me just pull up a website for you really quickly. Bear with me while I do that. Did not expect that question. I should have, though. Let's see. Earnings. Where's my earnings cheat sheet? Here we go. So let me pull this up so everyone can see it. We'll go back to time and sales in a second. So I'm just on Earnings Hub. And that, they have cute little, colors and stuff. And you can check out by day, right? So, yesterday you saw all the earnings. We had that McDonald's earnings that Pharm got me all pumped up about. I was craving a Big Mac after listening to his speech. Amazon and Apple were after the hour, so this kind of breaks it up between morning and after the close. And when you click on this, oh boy, wait, hang on a sec. Yeah, when you click on it, it gives you a whole bunch of information. And this is free, right? You have to surrender an email address, I know, but it's free. So boom, just click on that and it gives you some stats, right? And this has already happened, so you're not going to get estimates by clicking on this. But if you go over, so today before the open, we had ExxonMobil, Chevron, Fubu, Shell, Cisco. So you can see that these are the major ones, right? And there's nothing after the close because it's Friday and nobody wants to release it after the close. So that's the website I use for that. So in any event, time and sales. All right. So again, you could customize your colors, your fonts, and all sorts of stuff. And I won't go into that detail, but once you experiment, the thing about NinjaTrader 2 is you right click on stuff and you get things happening. You get properties, you get pop-up menus, you get all sorts of stuff like that. And someone asks how to find it, just go to your control center. That's this rectangular thing. It's rectangular. This has a lot of stuff on it, by the way. This rectangular control center. You just hit that new button and then just go down. It's just TNS, time and sales. It'll pop it open for you. So, oh boy. Jeff says, I like to filter to a bigger than 3. It gets rid of a lot of the high frequency noise. Yeah, again, you could experiment with your filter. Filter is important because when you see all these 1 and 2 lots coming through, it might not be as helpful as you think it is. At least not for me. I haven't figured that one out yet. Crude oil. Who's asking about crude oil? Arslan, well, you just missed a good summary by Tracy. She's the crude oil expert of the universe. But I'll just kind of try to remember that conversation. From a daily chart point of view, I like to plot a couple of things. I like to plot the volume profile on the left-hand side. This shows all the volume that's happened at any given price throughout the session. You could anchor it to a certain starting point, or you could just set it for the session open, which was last night at 6 o'clock. Lost my screen there. That's kind of number 1. Number 2, I also have a session VWAP, volume weighted average price. That's that white line going around. You could add standard deviation bands around it if you'd like. You could also anchor that to a particular start time. Maybe you want to anchor it to the open of the London session, which is my purple parallel lines up there, or maybe you want to anchor it to the open of the U.S. session. So you can have that flexibility with the software. It's pretty good. The other thing I have on here is previous sessions highs and previous sessions lows. So that green dot, that's previous sessions highs. That's the high we made yesterday. And then somewhere down below is previous sessions lows. That's that red dot. And then I also have my daily pivots that has the pivot point itself and R1, R2, R3, S1, S2, S3. And then all these other lines, they're options levels that we get from Mentor Q. So it's called Mentor Q. That's their website. And you can see my label up there. That's how you spell it, Mentor. Not method, but Mentor. I was calling it method for a while. That's where that is. So again, nice orderly sell-off for all the reasons Tracy said. We're still at a 58 handle right now. We have a really important gamma level. The biggest gamma level is called JAX1 or JEX1. I call it JAX1, GEX1, and that's based on the futures market. That's at 5,800. Right? I'm sorry, 58 even, not 5,800, 58.00. And, we're trying to test it right now. We've wicked through it once before. It created the bottom of the initial balance, which is the bottom of that white, it's the white parallel lines that you see on my chart. Those are, the initial balance is the first hour of trading after the New York bell ring. So from 9:30 to 10:30. That's what that represents. A lot of traders like to look at that range, look for breakouts, look for reversals. And we've been pretty much trading within that range all session, right? So probably some of the steam is kind of let out of this market, but we're down a whole $1 almost, almost $1 from the start of that initial balance to where we're at right now. So again, this does not look like it's going to rally anytime soon. It is Friday, and this does settle early. As a general at the CME, even though it trades to the very end, to the bitter end with equities, it will settle, and it'll be less institutional participation in all of that stuff. And just to backtrack a little bit for the crude oil question, double bottom is in play right now. We're touching it right now, right at that 5,800 even level. We have a couple of probes or target wicks that went below it. One of them was 55.07. The other one was this guy right here, 56.33. All the moving averages are arcing downward. And the VWAP, we have a lot of anchored VWAP from the highs back in the 2nd of April. We have a lot of price separation between that white line and where we're at right now. Stochastics are looking pretty bearish also. But remember, this is a news-driven market too. It's supply. This is one of these. You need to kind of spend a little more time analyzing this from a macro point of view, and definitely you want to be in the hot commodity segment with me and Shai, because she's really great at telling you the macro skinny behind what happens. And we talked about some fake news that happened a couple days ago. So this is a supply and demand driven market. It's a bellwether for the economy, and it's also though it's a news driven market too. So rumors matters. You got to be careful there. So that's kind of that's crude oil. I mean, that's the story of crude oil for now. Oh boy. So Ty says, what is the R1 indicator called in the jacks? All right, so let's go, and I have it applied on an intraday chart. Let's just shoot. Well, we'll keep it at crude oil for now. These are the daily pivots, right? And it's been around since the dawn of time, since the dinosaurs when I first started. It's based on the calculation for the daily pivots are based on the previous session's open, high, low, close in the range, and it's simple formulas. But the pivot is highlighted as a PP on my chart, and then above it you have resistance levels. Resistance 1 is R1. You got resistance 2 up here at R2. And resistance R3 is somewhere way up here, is R3. On the downside, you have S1, S2, and S3. And, there's S2 right there. There's S1. And why do these matter other than, I mean, I don't know. I think these matter because a lot of traders use them. A lot of traders use them as areas of interest, support, resistance, where you enter, where you put your stops, where stops are going to be run. All of those kind of concepts apply to these daily pivots. So I'm a super fan of them. I've been using them forever, and they don't always, they're not always 100% accurate, but a lot of times they get you close. As an example, the pivot right now is kind of holding a support, and I'm just going to kind of go ahead and draw a rectangle to kind of for a graphical kind of highlight. So, we bounced off the pivot once. These are 30-minute candles. Bounced off the pivot a second time. Yeah, we wicked through it. We bounced off it a third time. Now, the fourth time we closed below it just a little bit. 9 cents. And now we're right back up to it again. So this pivot is important right here, right now. From the opening range forward, this is important. So that's what those are. And when the market trends, let's say we had a breakout to the downside, right? We broke on through below this initial balance. We break out through this initial balance. It doesn't hold. Just, the dam breaks, water's flowing through. Then you have these other targets, right? And I'll talk about the jacks numbers in a second. But then you have S1. And so now, when I watch Stowe and these guys trade, they're really good at kind of being patient and waiting for the trend to exhaust itself, right? Because when a trend is happening, sometimes it's a little bit up and down. So when I think about if I was short and I'm thinking about, well, what's the potential of this trade? The first thing I'm looking for is S1. Where's S1 at? Is this a good level? Is there other areas of interest around there? What do we have to get through to get below to S1? So that, again, it's a target for me. Now we're probably not going to get that breakthrough today. The jacks levels are they're without getting too much into the weeds. They're called gamma exposure levels, right? And so in the options world, if you're trading options options on futures, which the CME offers, you're going to see the options tree, if you will. It's going to show even numbers. So 59 even would be an important level, right? So we know there's a lot of option activity hovering around that JAX 2. If you think about JAX 1 being the most intense, JAX 2 being the second most intense, 3 and 4 and so on, that JAX 2 level at 59 even right there is an important level. And, interestingly enough, now this isn't a perfect example, by the way. Interestingly enough, it's right by the point of control, at the volume point of control, and right by the open. So we have 3 areas of interest all converging together right here at that JAX 2 level. So if this wasn't a Friday and if we weren't so late in the day, I would be thinking, all right, if our low is in for the day, if the pivot holds, and there's some upside potential here, where is that upside potential? Where are these areas of interest? Well, you got JAX 2 right there. That would be a target for me. Yeah, you'd have to get through the VWAP first. That would be challenge number 1. But then JAX 2 is right there. So that's kind of how I think about it and use it. And then there's other Mentor Q lines on here. For instance, we have the put support, which happens to be the same as the 0 DTE put support and the 0 DTE high volatility level, and that's at 60. Again, an even number. So that's painted on my chart as well. Now, where things get really kind of interesting with the Mentor Q data is you have these things called blind spots, right? This is blind spot number 1. It's hard to see probably from your point of view, but blind spot number 1 is aligning up with previous sessions highs right now, and that's kind of a secret sauce that Mentor Q puts together. And what they're saying is, hey, this is an important level for traders because of the equation that we're using to come up with this area of interest, and they call them blind spots. So, and I don't know what the equations are. So, but in any event, I have those as well. And so when I see those aligned with another area of interest, which previous sessions highs certainly is for me, then that raises my eyebrows as well. And then lastly, but not leastly, they have a thing called 1-day min and 1-day max, and that's basically their expectation of what the maximum minimum is going to be, or what the 1-day minimum will be, or what the 1-day max will be. Now, it doesn't always happen that way, but it's based on, again, it's statistically based data, and you can see 1-day max is way up here. We're not going to achieve that today. So that's the best of my ability to explain it. And remember, you're going to see different levels in the equity world than you are in the futures world, but this even number thing kind of works. Oh, boy. Anyway, all right, let's keep rolling here. We got a few minutes left. Any last second questions for me? Type them in. Be happy to talk about it. Remember, we're not broadcasting this afternoon. NinjaTrader Live is done in about 7 minutes for the weekend. So let me just say right here, right now, have a great weekend, everybody. Ty, thanks. Appreciate you being here. Appreciate everybody being here, by the way. We'll take a real quick run around through the stock index futures and the bonds and notes, and then we'll wrap it up. Even the S&P right now is interesting. So let me try to make this a little bit better so that you guys could see it a little bit better. And I want to show that volume profile because this is a capital P-shaped volume profile. P as in Paul. This is the yellow, not the yellow, the orange histogram bars represents one standard deviation of price, of volume rather, that's traded today. These represent volume. And at the top, there's a little tiny dark brown level there. Those are called prices above value. And then down below, we have that long tail, right? In the transition between the orange and the brown, prices below value. I know it's not a very clever word, but it's prices below value. So a value area is the one standard deviation of volume. Point of control isn't really dominant, right? So you have at 56.91 level, and you can see there's all sorts of kind of competing points of control, right? So this is kind of the sweet spot where this market's been trading volume, and we didn't get there until this big giant candle, right? We don't have any candles that have traded at this price level before that 8:30 to 9 o'clock candle. So once we had this big spike after the numbers, then this is where price settled. This is price happiness right now in this area that we see. Now on the upside, we have some serious resistance we're trying to break through right now. We have, that options call resistance level plus the 0 DTE call resistance level plus the 0 DTE gamma wall plus a blind spot and plus the initial balance high. So this is congestion right up here. We haven't been able to break through it for, well, 2 hours now, right? We're trying to, but we haven't been able to break through it for a couple of hours. Any type of retracement that's happened has kind of failed, to be honest with you. We haven't had a big retracement. So this is pretty much, I think, as Sara was talking about earlier, this is pretty much a positive. This is a positive day in the mini S&P. Short of some crazy news, I'd expect us to be sticky up here. There's one asterisk I would put on that sticky comment is sometimes, and let's go back to a daily. Sometimes on a day like today, you have a lot of folks that are long, a lot of folks that are buying, right? And folks that are holding positions, swing traders, even day traders that are going to be long going into the close, and they might not want to be long going into the weekend. So remember, when you buy something, when you buy a futures contract, you immediately, as soon as you do that, you become a seller. You're a seller now. So all these buyers are sellers now, right? The question is, have they already gotten out? Doesn't look like it too much. And are they holding, right? Is there enough reason to hold over the weekend? So, a lot of folks are risk off on the weekend. I don't want to hold this over the weekend. So I'm not saying we're going to have a sell-off on the close, but that's something to consider. That's something to consider when we get toward the end of the day today. Boy, that's the story of the mini S&P. If we do break through, guess where my target would be? You guessed it, R2. It's right there. 57.12. After that, we got some minor jacks levels. I don't know about the jacks 10, jacks 8. That doesn't get me too excited. But then we get all the way up to that 57.50 number, and that's going to be a good target as well. Will we get there today? Who knows? Anything is possible. I mean, Pax was talking. Can't remember his number, but it was way up there for sure. Footprint guy, appreciate you, man. I know I'm winding down. I'm getting ready for the weekend. It's we might have to start martini o'clock early today. Don't tell Deli and Shab I said that, but we might have to start martini o'clock early today. Just saying. Oh boy. Let's go. Let's do the bonds one last time here, and then we'll wrap it up. Last mark of the day: 30-year Treasury bonds. Another great market to trade. If you haven't traded them before and you're thinking about trading them, I recommend you start with the 10-year note. They're a little less caustic. I'll use the word caustic. That doesn't sound friendly, but I'm going to use it anyway. Intraday right now. Again, huge sell-off. We lost. The session volume weighted average price when that number came out in our rearview mirror all day. Had a little bit of consolidation during the initial balance, but nothing to hold us. And then we kind of broke below that. So we have a single break of the initial balance, not a double break. And again, we're driving down. I see there's my target, S2. There's another target, 1-day min. So we're getting close there. Remember, this market is a little bit bigger than markets that you're used to trading. Each tick is worth $31.25. So yeah, you get a bang for the buck on the commission side of things. But remember, that's also the bid-ask spread. It's $31. It's that $31. So keep that in mind when you're trading these. Again, I recommend start with the 10-year notes. They're half the size. They're trading in half ticks, right? So it's a $16 and $15.25 or whatever it is tick. So it's a little bit easier to swallow for sure. So in any event, we'll see what happens with the 30-year bonds. Looking pretty negative as well. Gold's holding its own real quickly here. I know I said the bonds were going to be the last. We're just going to make this the last. Big sell-off though. Wow, look at this. Holy cats. We're not done in bonds. I mean in gold. Look at that. Nice area support. 1, 2, 3, 4, 5, 6 candles. 3. That's what is that? 3 hours. Then boom, big breakout. Something spooked this thing. Bang, right down to Jack's 5. Go figure. In any event. All right. Well, that is it. That is it for NinjaTrader Live this week. Thanks everybody for being here. Appreciate everybody being here. I said this before. You guys make this community, you guys and girls, unisex, all right? You guys make this great, this community great. You know, high tides lift all boats, and that's because of you guys. So thank you so much for being here. Hopefully, Paul says epic gap down on Sunday. Oh man, I don't know. I hope not. If I'm long, I'm getting out. Anyway, have a great weekend, everybody. Hopefully, spend some time relaxing, family, friends, whatever you do. Chill out a little bit. We have a lot of work to do, as Shai pointed out. In the meantime, especially going on the weekend, most important message of the day, please be safe out there. Be good to each other. Thanks for coming.